This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news. Tensions between the U.S. and China have heated up even more. The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Tom Keene still on Roman holiday. There was a Vespa sighting over the weekend.
Cherry red. I mean, it looked good.
Classic Vespa,
yes.
Cherry red in Rome. Looking pretty solid, but apparently he'll be back tomorrow, so we'll see what we can do here. We got a lot of economic data coming up this week, a lot of earnings data. We're going to be a very heavy earnings week here for corporate America. We get a better sense of how these companies are doing, how the economy is doing. We're going to start off strong. Kathy Bostjancic, she's the chief economist at Nationwide. Discuss why maybe a November rate cut isn't guaranteed right here. Akshay Signal, managing director and global head of FX short-term interest rates at Citi. He'll join us as well. Henrietta Treyz, she's at Veda Partners. She gives us everything we need to know about this campaign. And we've only got 15 days left, so it's starting to get pretty serious here. So we'll stay on top of that. But right now, let's kick it all off. Miss New York Yankee fan extraordinaire, Lisa Mateo, bring it.
I know, I got the jacket on. Check out the back on YouTube.
Perfect.
There we go. Got to get things started right. A great weekend. Right now, we'll get to stocks. Okay, so they're pausing their gains. Investors looking toward a busy week of company earnings. There's a lot. They're waiting reports from Tesla, Boeing on Wednesday. Then we have a bunch of other companies, including General Motors, IBM, Unilever, Deutsche Bank, Coca-Cola. So a lot to look forward to. Right now, we'll get to NASDAQ futures. Down, though, 0.5%, 105 points. Dow futures down 0.2%, 98 points. We have S&P futures down about 0.3%. Or 17 points. We have the 2-year yield, 3.99%. That's up 3 basis points. The yield on the 10-year, 4.13%, and that's up 4 basis points. To commodities, oil climbing, gold touched a record, mounting tensions in the Middle East. We have Brent crude right now, $74 a barrel. WTI crude, $70 a barrel. We have spot gold at $2,734 an ounce. Shares of Boeing, they're up about 3%. Union workers, they hammered out that tentative agreement with the company, raises pay by 35% over 4 years, but approval far from certain. Machinists vote on October 23rd, which is actually the same day as earnings. Then we get to Spirit Airlines. They're up 23%. The carrier reached an agreement with the U.S. Bank National Association to extend a deadline by which that airline has to extend or refinance 2025 bonds, maintain its credit card processing agreement with the bank. And finally, Qantas, yes, faces a potential $67 million payout for about 1,700 ground workers it illegally fired during the pandemic. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting here for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. Lisa just called out gold. I pulled up the long-term chart here. Just amazing how gold has been just this phenomenal upward and to the right, another record. You know, you talk to the gold folks out there and they say it's a big part of it is China. Consumers are buying it, but the government is buying gold, and that's been a big driver of that move.
Plenty to worry about as well.
Yeah, exactly
plenty of
right.
uncertainty to worry about.
Exactly right. Good stuff there. Let's talk a little economics here. Let's set the plate. Let's set the scene for the week ahead. Kathy Bostjancic joins us. She's the chief economist at Nationwide. Kathy, thanks so much for joining us here. Lay out for us kind of your view of this U.S. economy here. I've got a Federal Reserve that's cutting rates. I'm not sure how aggressive they're going to be. I got some pretty decent retail sales last week, so I think the consumer's a good place. I think the consumer's got a job if he or she wants one. What's your view of this U.S. economy right here?
Good morning, Paul. Well, the economy is quite resilient, and that's what you're seeing in the consumer spending data and the labor market data. And it's, I think it's surprising to the Federal Reserve, surprising to many investors. The strength, continued strength. It's obviously welcomed. The economic expansion can continue, and I guess it gives the Fed a good problem to try to think about, how quickly they need to continue to recalibrate interest rates, as they say. Inflation was a little bit sticky, though, and that throws a little bit of a wrinkle in the plans. what they want to make sure is that, as they're recalibrating interest rates lower, they don't stop the disinflationary trend in inflation was been in place, right? That's the reason they can cut rates. We've been, always arguing it's really the pace of employment gains that will dictate, how fast they can cut rates.
Kathy, what about the uncertainty around the so-called neutral rate, the long-run equilibrium interest rate, R star? What's your sense of sort of what the the Fed's thinking on that is as they undertake this recalibration, as you call it?
Great question, because that, is the guiding star. That's the North Star. And the problem is, as the New York Fed President John Williams has said many times, and he's the foremost expert in the area, as you get closer to the North Star, it gets a bit fuzzier. So you don't really know, is it 275, 2.8? Is it 3.25 on the Fed funds rate, or is it 3.5%? It's unsure at this point. So they're going to use the data as guidance to tell them, how close they're getting to neutral. But I think there's a long run neutral, and then there's a current neutral. And based on current economic data, that's where the debate, I think, is ensuring. There's some signs really that monetary policy is very restrictive. Look with the housing market, look at the auto sector. They're really being weighed down by high interest rates. Middle income households, low income households are struggling under the weight of high interest rates. But on the other hand, retail sales continue to show a consumer that is going to carry economic growth, not just capping off a strong third quarter, but momentum into the fourth quarter. So that really is the debate for the Fed. We think they'll continue to cut interest rates. We still have in our baseline an 25 basis point rate cut in November. We have another one in December, but both of those odds, have diminished. There is more doubt, I think, among Fed officials. Do we really need to keep cutting rates, especially since they cut rates 50 basis points in September?
Kathy, how about the labor market here? We got a top line unemployment rate 4.1% or so. That seems pretty darn solid to me. But some folks tell us, some of the recent trends have been a little troubling. How should we think about this U.S. labor economy?
It is an interesting picture. So on one hand, there's still pretty good demand overall for workers, and the unemployment rate reflects that, very low 4.1%. On the other hand, when you look at the jobs that are created from the establishment survey, they're very concentrated in health and education, and also leisure and hospitality. Now, that's not unusual for economic cycles. You could continue to see the economy do well with this high concentration, but it also tells you, again, it's a sign that high interest rates are hurting the cyclical sectors of the economy. So you'd much rather have a broad-based employment gains. Right now, it's really highly concentrated.
You talked just a moment ago, Kathy, just about following the data, how much of this is data-driven. We have a cacophony of Fed speakers this week. Today, 4 of them, as I count them: Mary Daly speaking, Lori Logan of the Dallas Fed, Neil Kashkari, Jeffrey Schmidt of Kansas City. What are you listening for in all of those speeches? Again, it seems like there's such monumental uncertainty just a couple of weeks away, 15 days away till this election. We might not have a result by the time the Fed meets once again. How valuable are the insights from these Fed officials, just bearing in mind that uncertainty that looms so large?
I think it's very valuable, because that's the forward guidance, right? And that's one of the tools that they can offer the markets, is this verbal guidance. There's 6 weeks in between meetings, so this is their time to give their thoughts. On the other hand, they're all individuals, so you're not getting a consensus view, but you can pick up where are the doubts increasing? Like, are they leaning towards saying, what, we know economic data have come in stronger, but we're still really restrictive, and we think we can continue to lower rates, and we have room to do that? Or is there some concern that maybe we need to go a little slower, even slower than the markets think, because we don't want to revive inflation?
Kathy, thanks so much for joining us. Really appreciate getting a few minutes of your time. Kathy Bostjancic, she is the chief economist at Nationwide. Again, I'm looking at my ECO Go function on the Bloomberg terminal. It gives you all the economic data that's coming out over the week. You can screen by country. And for the U.S., we got a lot of data points coming out this week, including we got a lot of PMI data as well. We got some jobless claims. At the end of the week, we have the good friends at the University of Michigan. With their current sentiment, they don't just make good football players out there; they make good economists. So we always look to our good friends at the U-Mich. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. With Election Day 15 days away, the candidates are working the campaign trail. Former President Trump worked the fryer at a Pennsylvania McDonald's. Later in Lancaster County, he talked at a rally about Social Security.
We're going to do a lot of things. For one thing, no tax on Social Security benefits for seniors.
Meanwhile, Vice President Harris was at an event at the Atlanta area church.
We understand that for us to do good works, it means to do it in the spirit of understanding that our strength is not based on who we beat down, as some would try and suggest. Our strength is based on who we lift up.
The Harris campaign says it raised more than $221 million last month, more than 3.5 times what the Trump campaign collected in the same period. Hurricane Oscar made landfall in Cuba last night, bringing powerful winds across the island, which is already experiencing an island-wide power outage. Senior hurricane specialist Brad Reinhardt.
What's going to be the biggest problem going forward is the heavy rainfall associated with Oscar. So, it could produce rainfall amounts of 6 to 12 inches with isolated amounts up to 18 inches across eastern Cuba. And so that's going to pose the potential for flash flooding and mudslides, particularly over areas of mountainous terrain.
Oscar's maximum wind speeds were 80 miles an hour when it made landfall. Finally, it's Broadway versus Hollywood. The Dodgers eliminated the Mets 10-5 in Game 6 to head to the World Series. Los Angeles now faces the New York Yankees in the Fall Classic starting Friday. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Michael, thanks very much. Lisa, let me just ask you about your eagerness, expectation for this world. This is, I gather, the most common World Series matchup in history.
Yes.
Dodgers-Yankees. Not to diminish the importance of it, but a great game the other night. And then last night, we had both games, both the Liberty game and the Mets game on in tandem. Heartbreak for my son, the Mets fan. But
oh no, so sorry to hear. But it was just exciting, like watching it, and it went so late too. Like it's around midnight, and everybody's like, still going about it. But to see like Soto, it's just incredible. Like everybody's saying, got to bring it back to New York. Got to bring it back to New York.
First meeting since '81. I'm getting a correction there. That common, but it's been a while, Michael.
It's been a while. I haven't seen Lisa this happy since she had a winning lottery ticket.
That is very true.
You know what it is? Because I finally get to watch sports on the weekend, because during the week we can't, because we got to be in bed by like 7:30.
Yes. Yes.
I did the wrong thing last night and stayed up late to watch both of these games. This morning. But we haven't talked about the Liberty game, which was like a treat to behold. And I will say every game in that series came down really to the margin of like 2 or 3 points. And last night, I guess we had a buffer of 5, so it was a little bit of a wider win. But just incredible energy in the Barclays Center last night.
It was packed too, right?
Packed to the gills. And I fleetingly looked for tickets and was quickly begged off at the price.
Shunned away, yes.
No, they had the upper level totally full, and eager to see what the team does next. But great to see the New York Liberty win their first WNBA title since the team's inception, and a lot of smiles on their faces, and a lot of smiles on the faces of my kids as well. They stayed up despite the late night.
Your girls are fans.
There you go.
See?
Much more to come here on Bloomberg Surveillance Sports, and otherwise we continue to look what the Fed might do next, right here on Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Call an Oppenheimer professional today. All right, futures right now pointing to a lower open. This is on a busy week for earnings. According to Fact Sheet, 112 S&P 500 companies, including 7 members of the Dow Industrials, set to report third quarter results. Among the highlights, Tesla, Coca-Cola, IBM. Let's get to futures right now. Nasdaq futures down 0.5%, 116 points. Dow futures down 0.2%, 93 points. S&P futures down 0.3%, or 18 points. We have the 2-year yield at 3.98%. That's down 3 basis points. The yield on the 10-year 4.12%, and that's down 4 basis points. To currencies, the dollar stronger. Japanese yen weaker at 149.89 against the dollar. We have the euro, British pound weaker as well. Bitcoin lower after flirting with 70,000 right now at 68,374, down about 0.5%. Some deal-making news. Sources say MetLife in advanced talks to buy PineBridge Investments assets outside of China. Its deal could be valued at $1 to $1.5 billion. And CD&R said to be near a deal to acquire control of Sanofi's consumer health unit. And then finally, shares of Tylenol Listerine maker Kenvue up 5%. Sources say the Wall Street Journal activist investor Starboard Value, it has a sizable stake in the company. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on that intraweb thing, youtube.com, search Bloomberg Podcast, and that's where you'll find us. I think we've got, central banks pretty much around the world cutting rates, maybe the notable exception in the Bank of Japan. What are you doing if you're trading these currency things out there? I don't know. Akshay Signal, he joins us. He's global head, FX, short-term interest rate trading. That's a title for you. At Citigroup, he's over there at 390 Greenwich. I'm going to say the 3rd floor, maybe the 4th floor. I can't remember when I was over there slinging stocks. Akshay, thanks so much for joining us here. Where do you? Well, first of all, let's just start with our U.S. Federal Reserve. What's your call? What's the Citi call for what our U.S. Federal Reserve is going to do, and then kind of how does that inform your positioning?
Thanks. Yeah, the Fed's very interesting. I think we're pricing in around 20 basis points of cuts both for the November and the December meeting at this point. And I think odds are that they will deliver those 25 basis point cuts. But the real risk, I think, that the market has now moved to is that the data continues stronger and they might not end up cutting perhaps in December. And I think, when you look back at what they did in September, I mean, effectively, the Fed was a bit bamboozled by this data. Like in July, they had a very weak print, which ended up kind of forcing Powell's hand to go 50. And now it's been reversed with the past data print. And so now they're in this very difficult situation where unemployment, as you mentioned, is at 4.1%, is a low 4.1. I think it was 4.05%. And it doesn't seem like they really need to be easing a whole lot more yet.
Actually, I think I was on with you the last time you were on the show. Tom was here. Your Caltech degree was much ballyhooed by Tom while he was here, and Paul was off. But you mentioned the Fed being bamboozled by these data. As I recall, you were not, and you were kind of counting on this larger cut at that last meeting. What was it about those data or about what you heard from the Fed that sort of led you in that direction that made you convinced that this was a Fed that was going to go bigger rather than small when it began this rate cutting cycle?
I think it really came down to the way that the Fed interprets that data. And so when you hear Powell and what he had said at Jackson Hole, he was very dovish and he'd kind of shifted his mentality to focus solely on the labor market and indicated that he kind of wanted to do something significant. Now you look at kind of what he said at the press conference, a little bit of a more hawkish pivot, and really the data has totally changed. And I'm really focused on understanding what the Fed is thinking about the data. So if you take the data ahead of time and you say, here's what the Fed has to look at, how do they interpret that information? And I think now it's a little bit clearer that they jumped the gun. And now they're kind of backtracking and seeing what they can do while still saving face. And I think the easiest option for them at this point is to go 25 in November and probably 25 in December. But that remains open. Like if the data shifts, they will also shift. And I think that's important. And that's also, what the previous guest was mentioning as well.
Akshay, given what various central banks are doing around the world in terms of cutting rates, where do you see value in the currency markets these days?
Yeah, it's an interesting question because you do see a lot more of the central banks moving in the same direction. So the relative yields are staying more constant than they might otherwise be. But I think the way that we look at it is at this point, the U.S. economy is still quite strong. Europe has seen a string of much weaker data over the past month, while the U.S. has outperformed. And so I do think that when we look at the forward-looking picture, the amount of rate cuts that we'll end up seeing in the U.S., at least in the next few months, is likely to be less than what we see in either the U.K. or in Europe. And so based on that, we do look at it and think that there will be continued dollar strength. And we've seen that in the past few weeks. The first couple of weeks in October, we have seen a continued amount of dollar buying from the client base.
What stood out to you from the commentary that we heard from Christine Lagarde after that ECB meeting last week when the ECB announced those cuts, and there's the expectation there'll be more to come here? What stood out to you, and sort of how do you hear that in complement of what we've heard from Fed officials? I was noting with the last guest just how many Fed speakers we have this week, and sort of how are you interpreting all of that?
Yeah, I think Lagarde was definitely on the more dovish side than where she's previously been. And one of the key parts was that she mentioned that it was unanimous, which she definitely tries to get to with the ECB. But the ECB oftentimes can be a little bit more cautious. And so to get that unanimity is important. And also, she did continue to kind of focus a lot more attention on the downside risks. The other part, the ECB is single mandate, and they mentioned that they would likely hit their mandate next year. And so with that, it opens up a much broader scope to be dovish and to cut rates more in the future. And so now we're pricing in around 30% of an outsized 50 basis point cut in December, which again to me seems very, very unlikely for the ECB to deliver because they tend to be cautious. And after just seeing what happened to the Fed, I mean, I don't think the ECB wants to fall into that trap either.
Akshay, before we let you go, love to get your thoughts here on the Japanese yen, a little bit weaker again today, pushing up on that 150 level. What's your thought on the yen and the Bank of Japan here?
Yeah, I mean, they're in a totally different ball game. As you mentioned, they're the ones that are looking at hiking rates, not cutting rates, and they've been in that situation now for the year. I think looking at dollar yen, a lot of the move higher over the past month has been as a result of the dollar strength and the reduced pricing out of the Fed in terms of cuts, more so than the change in the Bank of Japan stance. And while I do expect that the Bank of Japan will hike rates, I think that the pace that the yen yields will change is going to be at a much slower pace than dollars. So for me, dollar yen, for the most part, still reflects more dollar fundamentals more than the yen fundamentals. But we should continue to see yen appreciation given that convergence in the yields.
Akshay, thanks so much for joining us. Really appreciate getting your time today. Akshay Singhal, he's global head of FX short-term interest rate trading for Citigroup Global Markets. He's based over there in London in Canary Wharf. I had a nice office over there in Canary Wharf back in the day. We were slinging it around over there. So good stuff out there. When we were out there was nobody. Now it's
thickly
a city
populated
unto itself.
Yes.
They've done such a great job out there. You can live out there. You can actually eat out there. Exactly. I mean, we were out there, they didn't have the train out there. The subway would drop you off like 10 blocks from kind of where you needed to be. But they said, no, it's going to
be something, and lo and behold it is.
Yeah, lo and behold it is.
I mentioned Christine Lagarde. She's going to be interviewed tomorrow on Bloomberg TV. Francine Lacqua interviewing her at 10 a.m. Wall Street time.
Oh,
just flagging that.
Excellent, of course. S&P futures off 22, the Dow off 100, and NASDAQ off 135. That's 0.6%. WTI crude oil, it's up 2% here at $70.69. Gold, it's higher, $27.50 an ounce. How about that? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures lower, and this is after the S&P 500 capped its longest run of weekly gains this year. Goldman strategists, they warn U.S. equities probably won't sustain their above-average performance. We have more economic data on tap this week, including the Fed's Regional Economic Survey, the Beige Book on Wednesday. Also this week, existing home sales, new home sales, factory orders for durable goods, and a read on sentiment. Right now, NASDAQ futures down 0.6%, 135 points. Dow futures down 0.2%, 104 points. S&P futures down about 0.3%, 22 points. The two-year yield at 3.98%. That's up 3 basis points. The yield on the 10-year 4.13%, and that's up 4 basis points. Companies making news. It's Microsoft. The company says it's launching a set of AI tools that are the next step up from its generative AI Copilot. Now that puts a little bit more pressure on rivals like Salesforce. Walmart had reached a proposed settlement over 3 shareholder lawsuits related to its distribution of prescription opioids. And finally, shares of Humana, they're up 4%, and this is after that Bloomberg report that Cigna had revived efforts to buy it. That's a Bloomberg Business Flash. Paul and David.
Hi, Lisa Mateo. Thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, my question simply is, do we trust any of the polls here? I can't remember, I don't know. Sometimes they tell us the last election they were pretty accurate as it relates to the popular vote, but I don't know. I just think back to all the other elections. I think about Brexit, how bad they were on that one. Henrietta Treyz, she does this kind of stuff for a living. She's a managing partner at Veda Partners. Henrietta, are there any polls that you look at that you feel like are maybe more representative than others, and kind of what are they telling you these days?
Great question. Thanks. I actually really enjoy the fact that we are in the early voting process already. So now we can start to move, or at least add on to our data sets by incorporating the early voting data as opposed to just the polling. So that's informative and helpful. It's not for the faint of heart. It is worse than day trading. You get these huge baskets of data that swing the vote totals by these massive margins every single night. But nonetheless, if you're really digging into the weeds, you can start to watch early polling data, which is very exciting. And right now, effectively, what I would say is pay attention to the really great polls that are done by, tried and tested pollsters. So the New York Times swing state polls are particularly valuable. And then all the Bloomberg Morning Consult poll, which is more frequent, is very valuable. Stick to the big ones. There is a flood of polling right now that is coming from the campaigns themselves. And those tend to have pretty stark biases, 3 or 4 points in favor of whichever candidate. Right now, a number of those like Atlas, Rasmussen, Trafalgar are coming from Republican outlets. So you're going to see a Republican bench, which is what the polls are showing you right now.
Well, speaking of bias, the audience knows I bring my North Carolina bias to the show when I fill in. And here's a number that stood out to me. 1,800,123. That's the number of early votes we've seen cast in just 4 days. And this is a state of about 10.5 million people. Wow. Talk a bit about early voting and if this seems like an outsized level of enthusiasm so far, sort of what we know just a few days in for how many people are voting early and what that says perhaps about the trajectory here going to Election Day on the 5th.
It's really exciting, and congratulations on having North Carolina on your radar. And I'm sure you have friends and family that are in the area that you're getting feedback from in real time and anecdotal stuff. North Carolina and Georgia are breaking records for turnout. I would say probably the main takeaway for me right now is that Republican voters are voting early in much greater frequency than they have in the past, and about double the rate of Democrats. So that's the case in Nevada, for example, which I was just spending some time with this morning. And effectively what's happening is Republican voters have been, very exposed to this idea of a election that may be stolen and what have you. The Republican governors in those states and Republican operatives like North Carolina, Georgia, and Nevada have been spending millions of dollars trying to encourage their voters to come to the polls early. And that is really panning out. So you're seeing these substantial increases in Republican voters who usually vote on Election Day coming to vote early. And that's, I think, a main driver of that record turnout number.
Henrietta, what do we know about, the down ballot situation for some of these key states, key seats? What are we hearing, and how do you expect that to play out?
Down ballot's really still moving very substantially for the entire year, as we've discussed in the past. Democratic candidates in the Senate seats like Ohio, Pennsylvania, Nevada, Arizona, Michigan, Wisconsin, et cetera, they've all been leading the top of the Democratic ticket, whether that's Kamala Harris or Joe Biden. Throughout the year, they've been polling ahead 5, 6, 10 points. As the final voters decide which direction they're going to go, the delta between Democratic senators and Republican Senate candidates has dropped substantially. And now voters are going to the direction that they have since 2016, which is they're going to vote party line down the ballot. So what we're starting to see is material tightness for the Democratic candidates in Pennsylvania. We're starting to see that tighten up in a state like Arizona and Nevada, where the Democrat is still comfortably ahead, but the Republican or challenger is starting to move a little bit further up in the polls as voters decide which direction they're going to go at the top of the ticket, Kamala Harris or Donald Trump. So we're seeing that the races are really tight. My expectation with 90% odds is that Republicans are going to control the Senate next year, and that's mostly a virtue and a factor of Montana. In Montana, Donald Trump is on track to win by 21 points, and that's a bridge too far for any Democratic incumbent to supersede. Usually a down ballot senator can outrun the top of the ticket by about 4 or 5 points. But for John Tester, the senator from Montana, he's underwater now already against his Republican challenger, and then he's underwater by about 15 to 17 points against Donald Trump at the Republican top of the ticket versus the Democratic ticket. So my expectation, almost regardless of how the swing states go, is that Republicans will control the Senate next year.
Henrietta, let's talk a bit about Elon Musk. He spent his college days in Pennsylvania. He's back in the state, spending a lot of money. And the thing that's getting a lot of attention this morning is his it's almost like a sweepstakes. If you sign his pledge here to support the First Amendment and the Second Amendment, you're in the running to win $1 million a day. My eyebrow is raised as a result of seeing that, wondering if that's legal. I gather there's some interest on the Democratic side in getting law enforcement to look into what he's pledging to do there. Talk a bit about that scheme, if you would, what you make of it, but then more broadly, sort of how he's changing or trying to change the ground game in Pennsylvania.
Yeah, a couple of really good points here. First, it's illegal to buy votes. And so what Elon Musk is doing is he's buying signatures. He's trying to get you to sign up to support the First and Second Amendment. He's also trying to get you to sign up to register to vote. That is a technicality that is different than actually buying your vote on election day. So he's circumventing that part of election law. Democrats are, of course, screaming about it because it's designed with a monetary value behind it and it's about voting. So they're trying to get the Elections Commission involved. But that is the way that he is sidestepping that issue. I think you're seeing as a general strategy from the Republican camp, from Donald Trump, is to farm out a lot of the campaign to third parties. So whether that's, trying to have a third party boots on the ground program that will get you volunteers and door knockers in an individual state, or in the case of Elon Musk here, with trying to buy signatures to get registered to vote, or in the case of even the predictive markets. You've seen that on Polymarket, for example, with this sharp uptick from an estimated 4 accounts, driving the odds up to 61% as of this morning that Trump will win. This is all sort of third party designed to influence voter perception in the final days of the campaign. And you still have about 24% of the individual voter base who's undecided about which direction they want to go. What they're trying to do is influence the idea of where momentum is, because voters like to vote for the winner. So they're trying to give this projection and this image of winning. And I think that's a big part of what the Elon Musk campaign is all about.
So Elon Musk for former President Trump, maybe a Mark Cuban for Vice President Harris. Do these types of celebrity supporters, do they mean anything at the end of the day?
I think what Republicans are trying to do specifically is turn out very keyed in media attentive audiences in the young male demographic. So for this cohort, it very much could take hold. That unfortunately has yet to be proven. I mentioned earlier that a lot of the voters who are coming out for the Republican Party right now used to vote on election day, and now they're voting early. What's happening is you're actually not seeing new voter turnout. You're cannibalizing your election day vote. So there's a big to-do about a blue wall going into election day that's overwhelmed by a red wave on election day. That was the trajectory we saw in 2020. Donald Trump has talked a lot about that in the past, sort of this Democratic blue firewall. what Republicans are trying to do with this media strategy and this outreach to young, very online male voters is get them to come out and vote for Donald Trump. What we're seeing so far is that very enthusiastic repeat Republican voters, Trump supporters, are very galvanized this year. They're extraordinarily enthusiastic about voting for Trump, and they're turning out early. So it's not that we're seeing a new influx of voters thus far. There has been strong voter registration from Republicans in the last 4 years, but that's not what we're seeing in the early returns thus far. Again, as I said in the beginning, this data swings a lot, but right now it's all election day voters that are pulling forward, not new voters coming into the Republican fold.
All right, Henrietta Treyz, nobody better.
Always
I'll tell
great
you that.
to speak with you.
I
Yeah.
mean, always good on that one. Henrietta Treyz, thank you so much again for your time. Henrietta is a managing partner at Veda Partners, giving us the latest breakdown of a fluid situation. Again, 15 days away from Election Day with our news in New York City. Here's Michael Barr.
Thank you very much, Paul. David, Lisa. Lebanon is surveying the damage after overnight Israeli strikes hit nearly a dozen branches of a Hezbollah-run financial institution. We get more on those strikes by Israel with Bloomberg's Ethan Bronner in Tel Aviv.
They announced late last night, our time, that they were about to start doing so and urging civilians who live near the buildings that house these Al-Qard Al-Hassan Association institutions to get out of the way. And then they began a pretty heavy bombing campaign against them. They argue that this semi-quasi bank is, in fact, the way in which Hezbollah gets its money. And in fact, the U.S. Treasury did sanction that organization 8 years ago. So there's some history there.
Bloomberg's Ethan Bronner. Meanwhile, Israel's Prime Minister, Benjamin Netanyahu, has held a series of meetings planning the next attack on Iran after a Hezbollah drone exploded next to his private home. This as Secretary of State Antony Blinken is set to travel to Israel and other countries in the Middle East later today in a renewed push for a ceasefire between Israeli forces and Hamas following the death of its leader, Yahya Sinwar. Former President Donald Trump worked the fryer at a McDonald's in Pennsylvania. Trump again repeated unsubstantiated claims that Kamala Harris never worked at McDonald's. He later rallied voters at a town hall-style event at the Lancaster County Convention Center.
We want to keep it too big to rig, it's too big to rig. We got to make it that way.
Meanwhile, Harris spoke at a church event in Atlanta.
Are we a country that honors, through our faith and our deeds, the importance of kindness, of support?
Today, the vice president holds events in 3 states with former Republican Congresswoman Liz Cheney. Also today, the former president heads to North Carolina to survey hurricane damage. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
If you're Major League Baseball, Michael, this could not have broken any better, right?
Hey, Mr. TV executives, if you can't make this work now, I mean, this is what you wanted. You got it now. I mean, you got Shohei against Aaron Judge. This is what you wanted. Now, I want to hear about all this streaming stuff now after this series.
Yeah, I mean, you get L.A., New York, the 2 biggest media markets. You get 2 biggest stars in all of Major League Baseball. If you're Major League Baseball, I can't imagine it gets any better than this.
Just a joy to watch. I mean, we watched so many of these games and can't wait for the World Series. So I think, yeah, you're right. And we bit the bullet and bought the YouTube TV subscription as well.
Yes. So I'm not even sure where this is all going to be, but I'll figure it out where they're broadcasting all this stuff at some point.
This isn't your Keith Jackson kind of World Series. Yeah, they're going to be streaming this all over the place. You just proved it, David.
Yeah.
You just bought this.
Wasn't cheap, but
Do you have cable too, or just
no?
Oh,
he lives in Brooklyn. He doesn't have
yeah.
cable.
I've
Come
cut the
on.
cord, but now find myself paying more than I was paying for cable.
Yes,
I think
that's
it's the real
what
issue.
most people are figuring out. So anyway, we got the World Series all set up. Couldn't be any better. New York Yankees, LA Dodgers, some good stuff there. S&P 500 off about 19 points. That's 0.3%. The NASDAQ off about 122 points in futures. That's off 0.6%. 10-year Treasury yielding 4.13%. So much for refinancing my mortgage. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures leading the losses before the bell, down about 0.6%, 125 points. Dow futures down 0.2%, 98 points. S&P futures down 0.3%, or about 20 points. The two-year yield, 3.99%. That's up 3 basis points. The yield on the 10-year, 4.13%, and that's up 5 basis points. To commodities, we have Brent crude, $74 a barrel, up nearly 2%. WTI crude, $70 a barrel. Over to gold, we have spot gold higher at $2,738 an ounce. Taking a look at currencies, the dollar stronger, Japanese yen weaker, euro, British pound weaker. We have Bitcoin down about 0.7% at around 68,000. Some artificial intelligence news. Sources say Vision Fund 2 backed Perplexity AI in early talks to raise funding at a valuation of about $9 billion. And this news came out over the weekend. Girl Scouts of the USA raising its membership prices from $25 to $65. It's a two-step increase. It's going to spread across 2 years. It had, though, initially been proposed at $85 a year. So I guess 65 is better than 85. That's a Bloomberg Business Flash. Paul and David.
Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. You know, David, when we were talking to Henrietta Treyz, I was thinking, are there really undecided voters at this stage? I can't imagine.
Just an amazing section in the New York Times this weekend where they kind of looked at a really kind of micro level at these very small slivers, swing places within these swing states. It was wild to see, but we are talking about, you know, thousands of people here and there, and that's who's being targeted. I mean, I think there's a really monumental, expensive effort to get those folks out to the polls, but I don't know why they're undecided, but they are.
I think there's 42 people in some gym in the middle of Pennsylvania.
There you go.
That's going to decide this election.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, folks, your daily look at the front pages around the world is brought to you by IBKR. Financial advisors, switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. Lisa Mateo, newspapers, what do you got for us today?
All right, you were just talking about elections, so I want to get to this reality for the election workers, what they're living in. This is Arizona, Maricopa County. It's one of the most populous counties in Arizona. They're reporting that some of the workers, you have buildings that have been added, metal detectors, armed guards, but there's also police snipers, drone patrols will be on hand. This is for Election Day. Election workers going through active shooter drills. So this is like a whole new reality. A lot of these workers are living through. A lot of them volunteers too, on top of it. So a lot of them are saying some are scared to come in. But why this area of Arizona? Well, you know, it's sparked by years. Donald Trump's false claims, 2020 election was stolen. So he has told his supporters it could happen again. So now you have this whole entire security going on now in order to protect a lot of these workers. It's a new reality.
In Colorado, death threats from election deniers have led some county clerks and election officials to have bulletproof vests on hand. So you got that.
Yeah, so it's not just Arizona. It's nationwide. I mean, they're stockpiling Narcan because if you remember, they received ballot envelopes last year that has the white powder with the traces of fentanyl in it. So just a big, overall look at the security
Wild to
that's
think
needed.
about, will this continue? Obviously, we saw what happened last time, and that's what's informed this time. But as you mentioned, so many people doing this on a voluntary basis or taking these jobs part-time.
Right.
One wonders if the hassle of doing this and the fears associated with doing it are going to keep people from signing up in the future.
Right. The hanging Chad seems so quaint now, doesn't it?
Yes.
The hanging Chad. What else you got?
Okay, so Business Insider spoke with labor experts. They're looking to see, because it's this whole battle back and forth, is the college degree still a top priority for employers? So Business Insider, they spoke with a couple of them. They say that employers, they might no longer require a degree for certain roles, but those doing the hiring still care whether an applicant has one. So there's been different types of research that has been done. Some consulting firms say that it shows hiring for skills is 5 times more predictive of how someone performs on a job than hiring based on just education. But they also say that those hired based on their skills rather than education, tend to stay with an employer longer.
Mm-hmm.
I don't know if it's that whole thing of just, being happy that you've kind of been brought onto this company because you don't have the degree. But those are just some of the things that they're saying, whether this degree is still
I've told you this before. I drive up and down the Jersey Shore. Forget about the big monster houses on the beach. That's all the Wall Street folks, the tech, whoever those people are. In here. How about everybody on the Bay side? They're $2 million homes. There's tens of thousands of them just on the Jersey Shore. Forget about the rest of the world. And they each have a $500,000 boat moored in the back. Who are those people? Where did they come from? And what I think they are is, as I drive around, I think they're just small business owners. And they've just created this wealth, and that's it. I mean, and there's gajillions of them out there.
Yeah.
And I think a lot of them are going to be, in these coming generations, don't
have degrees, but
from the trades.
Yeah,
and they don't have any college debt or any of that kind of stuff. You just wonder where all that wealth comes from, and it's just small business, I think, in this country.
And then we just had that story not too long ago that a lot of private equity pouring money into the trades, like buying out a lot of these HVAC and plumbers and all that, who are now becoming millionaires.
There you go.
So there you go.
All right, this next article is not what I was expecting.
Yeah, okay.
The sandwich generation.
The sandwich generation. Okay. I hadn't heard that term before,
No.
so maybe I'm out of the loop. I don't know, but those are stuck between caring for their older parents and they have younger kids. And I'm talking younger because a lot of these people, these are millennials who are now reaching that midlife who had kids later in life, so now they have newborns, but yet they have parents who are 80 plus.
They need care.
Who need care. So now it's this whole struggle of, can they afford one, daycare, and then two, to pay for these aging parents who may not have prepared for staying alive this much longer.
And the
it's
elder
a struggle.
care is
so expensive. Yeah.
Oh my God.
11 million people in this boat in this country, which is a sizable chunk.
Right.
That's crazy.
Yeah.
It is. So, and then it's taking away from their retirement because they're putting all their money into, the daycare and the elder care.
Right. And then, and some of them have to leave the workforce because they have to take care of both parts of this sandwich, if you will.
Right. And they're saying that's a problem because most of those people are women. They're saying that's a massive risk for the economy if a lot of women start to.
And staffing's still a huge issue too, just because you can't get people to do this kind of work. So I think a lot of people are doing it by default. They want to get care for their aging parents, and they can't do it just because there aren't enough people doing those jobs.
That's true. Now, I know you're happy about the New York Liberty, right? Basking in their title. You had the sweatshirt on Friday, okay? But the league actually set to lose millions this season. Investors are growing impatient. This was in the New York Post. It was exclusive with them. They're saying the NBA, I didn't realize this, owns nearly 60% of the WNBA. So sources are telling the Post that NBA team owners, they've invested hundreds of millions of dollars in the WNBA since they formed. But NBA executives are saying that the WNBA will lose $40 million. But they're saying that, starting in 2026, they'll get that $2.2 billion over 11 years to part of this new basketball media contract,
deals,
right? So they have the new media deals, but still then they have the contracts are up. So now players are going to be starting to get paid more, as should. But that's another side of it to think of. But I didn't realize there was so much behind it. It's kind of confusing to me a little bit.
Just the way that it's structured. Yeah, and there are very few teams, I think, where they're kind of single-owned, but the Liberty are. I think that it's owned by one family now. But it is kind of jarring to kind of look at the crowds they were able to pull for the semifinals and the finals, especially, filling up. Not completely, but most of the Barclays Center last night, and the same out at the Target Center in Minneapolis. It looks like there's momentum here, but it's still a financial challenge for a lot of these teams.
It all comes down to the broadcasting rights.
Yes.
So if I were advising the teams, I would not sign a long-term deal. I would sign a short-term deal.
And why is that?
Because their rights are going up in value so dramatically that why lock yourself into a value today for 11 years when I think I can come back in 3 years or 5 years and negotiate a much higher rate. So I would go short-term. I think they're making a mistake to lock in these higher rates. But I can see the incentive because that's a big jump from where they are now. But again, as you mentioned, the players are going to want to get theirs.
And they're expanding. I think they're going to have 3 new teams in the next season as well, and they're going to prolong the finals. They're going to do a 7-game series next year. So they're playing this optimistically.
Yeah, they're in a great spot. I think, again, the value for most of professional sports is in the media rights. That accounts for the vast majority of the value of these teams. I don't care if you're English Premier Soccer or the NFL, it's the media rights, and so you really have to focus on them. Now they're getting a nice big jump here, but
they are.
I think you've got the leverage to maybe do a little bit more. So, all right, Lisa Mateo, thank you so much. That is our newspaper segment, backed by popular demand. Here's a little band out of Liverpool. Good morning. This is Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to talk a little emerging markets with Damian Sassower. He's in our studio. That's always a good time. Janet Rilling, head of Plus Fixed Income Team at Allspring Global Investments. We'll talk about the fixed income opportunities in this marketplace. Do I just sit in a 2-year treasury at 4%, or do I take some credit risk? Callie Cox, Chief Market Strategist at Ritholtz Wealth Management. She's going to be in studio. What are we buying there in the stock market? So we got a lot coming up. Phil Palumbo from Palumbo Wealth Management also give us his market call. So a lot of smart voices coming up in the next hour. We'll bring them all to you. But right now, let's go to Lisa Mateo and get a Bloomberg Business Flash. Lisa, what are you looking at?
You got it in stocks. Pausing their gains, investors looking a busy week of company earnings. Traders awaiting reports from Tesla, Boeing on Wednesday, as well as a bunch of other companies throughout the week. General Motors, IBM, Unilever, Deutsche Bank, Coca-Cola. Those are some of the few. Right now, we'll get to NASDAQ futures. Down 0.6%, 128 points. Dow futures down 0.2%, 101 points, and S&P futures down 0.3%, 21 points. The 2-year yield 3.99%. That's up 3 basis points. The yield on the 10-year 4.13%, and that's up 4 basis points. To commodities, oil climbing, gold touched a record, mounting tensions in the Middle East. Right now, we'll get to Brent crude up nearly 2% at $74 a barrel. WTI crude $70 a barrel. We have spot gold at $2,734 an ounce. Shares of Boeing, they're up nearly 3%. Union workers, they hammered out that tentative agreement with the company, raises pay by 35% over 4 years, but approval far from certain. Machinists vote on October 23rd. That actually happens to be the same day as earnings. And Spirit Airlines, their shares were up 23%, now up 40%. It struck a deal to extend a key debt refinancing deadline to late December. That's a Bloomberg Business Flash. Paul and David.
Equity is soft, debt is hard. That's what I was told early in my career. So you pay attention to what those fixed income and bondholders are saying all the time. Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in the Bloomberg Interactive Broker Studio. We are streaming live. That would be the video thing on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Damian Sassa, our Chief EM Credit Strategist for Bloomberg Intelligence. He is in studio. You were down in Brazil last week. I don't want the details. I just want to know what you learned from our good friends in Brazil, because that is a monster market. It was front and center for such a long time. I feel like we don't talk about it as much these days.
And it's an interesting market, Paul, because it's one of the few emerging markets, one of the few global markets where if you look ahead in the forward curve, they're pricing in interest rate hikes, not cuts, right? So they're going to be looking to tighten rates as opposed to stimulating, which is what we're seeing here in the U.S. But really, all of my meetings revolved around the U.S. elections. U.S. election season is here. It is all the rage. And look, I mean, it makes sense, right? Because if you look at what's priced into the Bloomberg dollar index through the election, it looks like the dollar, it's a very bimodal outcome. Dollar's going to move 3 to 4% one way or the other. And so, you know, I had a lot of clients asking me, you know, what are your thoughts in terms of the election? And I can't answer that, but what I can tell you is how emerging market currencies are going to react given the outcomes. And there are four, right? You have a red sweep, you have a blue sweep, you have red with a split Congress or blue with a split Congress. And from an emerging market currency practitioner perspective, you're looking for a Kamala victory with a split Congress, right? Because that means tariffs won't be nearly as severe as if Trump wins. And it means that a divided Congress, you won't get the fiscal stimulus you otherwise would have, which means yields won't go up as high and you won't see rate differentials compress and all that good stuff. But I won't waste your time with that, Paul. But look, I mean, the reality is,
what am I buying? What am I selling?
Right. What are you buying? What are you selling? I mean, look, you know, I can't tell you, you know, what you're going to do. I can tell you how you want to hedge through it, because if you just look at equities, fixed income, you know, currencies, pretty much the MOVE index, the VIX, I mean, we're talking about cycle highs in pretty much all of those indicators of volatility. The one asset class that really hasn't shown any evidence of preparing for what might come to be is credit. You know, so I mean, I'm curious to hear what Ritholtz has to say about credit markets and credit spreads, because quite frankly, spreads have not budged. I mean, they are seriously at cycle tights. And I think if you do believe you're going to see some volatility through the end of this year, either due to the elections or the year-end turn, whatever the case may be, you know, credit spreads are one way to play that. It looks like you can buy cheap protection there.
One of the wagons to which Brazil has hitched its star is China, and this BRICS summit is happening this week. Russia, India, China, Brazil, all meeting together, and I think the last time we talked to him before your odyssey to the Southern Cone was as China was unveiling a lot of these sort of broad contours of the stimulus measures they've put in place. We had more movement on that today. Chinese banks cutting their benchmark lending rates on the heels of some other cuts last week. How real is what they're doing? What does it say to you about the health of the Chinese economy? And if you want to dovetail that with what you saw in Brazil, I'd love to hear that too.
Yeah, no, I think it's interesting because, look, I mean, you know, historically, you know, the Brazilian real and the Brazilian economy has been tightly correlated to commodity prices, specifically industrial metal prices, which, as we know, China dominates, right? They are the leading consumer of that. So, you know, you would think there's some spillover. But like I said, you know, China is cutting rates. They have a deflationary problem there. They are trying to stimulate. And, you know, it's actually one of the few fixed income markets globally that's up this year and has been up pretty much every year for the better part of the last, 4 or 5. But Brazil is not, right? And the reason is that, you know, Brazil really is an idiosyncratic story these days. It's not just about mining. It's not just about metals. It's about agriculture. It's about, quite frankly, an economy that I wouldn't say is ailing, but has this sort of overhang of fiscal stimulus and this kind of risk revolving the independence of the central bank. You know, Campos Neto, the central bank governor, his term is almost expired. They have somebody new coming in, is a little bit, closer to, Lula Ignacio da Silva, who's the current president. So there's a lot of little idiosyncrasies going on in Brazil, which is creating a little bit of noise from an investor perspective. But fundamentally, that economy looks like it has an inflation problem, and they are going to be hiking rates in the face of a global economy that's cutting them. So I think if you're looking for any sort of rate differential, carry-related play, Brazil might be one economy that attracts.
How about the rest of the area down there? How do you think about the rest of Latin America vis-a-vis Brazil?
Well, I guess, you got to kind of differentiate the Andean region, Colombia, Peru, and sort of the North Latin American, Mexico from what's going on in Uruguay, Argentina, and Brazil. And Uruguay and Argentina are in interesting case study. We know the problems that have happened in Argentina, but they, appear to be under Milei, getting some wind behind their sails, at least for now. But what's interesting is from an investment standpoint, Uruguay stands out to me. I mean, I know it's off benchmark. It's not in any of, on anyone's radar, so to speak, but a lot of Argentine and Brazilian, fine money, wealth has found its way into Uruguay because of looser banking regulations. It's just, capital access and restrictions to capital going in and out of the economy are a little bit lighter than the other economies. And so it really is an interesting contrarian play for those who are looking for off benchmark returns, which is something that, a lot of emerging market practitioners hope to realize. So yeah, Uruguay is an interesting base.
Uruguayan sovereign debt, is that what I'm buying?
I mean, you can buy dollar bonds from Uruguay, sure, but they have local currency debt, which is trading in, the high single digits, sort of double digits, low double digits, and you can extract a pretty compelling yield there as well. And so I see a lot of investors looking for those types of stories. Dominican Republic's another one. If you want to talk about the broader LATAM Caribbean market, where you can sort of get that sort of high yield, idiosyncratic, local currency denominated emerging market play.
Is my Fidelity mutual fund buying? They're not buying this stuff, are they?
I don't know if Fidelity is for sure, but if you're looking at multi-strategy bond funds,
who talks to you at the end of the day? Like, what kind of clients do you have?
Hildebrand, Reader, they're all following my work, Paul. Come on, it's the multi-strategy, go anywhere, unconstrained bond funds that are really taking advantage of a lot of these markets. And look, a lot of EM local practitioners are indeed invested there, but probably in smaller size.
Let me go back to what you said at the top, which is the questions that you're getting about the election. And I wonder how much past is prologue. So when you're there in the early dawn hours in your hotel room, scrolling your notes for those meetings, how much are you drawing from what happened in 2016, 2020? How unique are the circumstances that we're facing today as you think through sort of the economic effects or knock-on effects of this election?
Well, I mean, if you compare the tariff, the impact of tariffs, I mean, you're talking about, 2 to 3 times the magnitude, right? So, I mean, if you look to the last, to Trump's victory as a precursor for what happened here, you're thinking that the move on the dollar could be as much as 2 to 3 times what we saw last time. That would be a magnificently strong move, and that would definitely have an impact on a lot of people's P&L. But I think, yeah, you're right. It's hard to take past as prologue, and I do think this time is a little bit different because you just really don't know what Trump stands for this time around. I mean, is he really, and whether or not he's going to be able to push through some of the stuff that he's recommending. So, there's a lot of what ifs here. I really can't say right now. All I know is there is a bimodal outcome coming. It's coming in the next 2 weeks, and you need to prepare for that. And I also think markets are underestimating the impact of what we saw at quarter end September. The fact that you saw SOFR Fed funds blow out, and there's going to be some stuff here going on in the plumbing in the U.S. financial system. We have a lot of T-bill issuance coming through between now and year end. It's going to crowd out a lot of other asset classes potentially, including EM. And so, yeah, I mean, I'm out of breath here. But, yeah, I think that's some of the stuff that, we're really paying close attention to here, yeah.
Right. More certain is the Jets season.
You're killing me here. Yeah, the Jets season is it's a dumpster fire. Anyway.
The quarterback, now a receiver.
Defense looks like it has some holes there, for sure. But we're getting someone back on defense next week. We get Hassan Reddick back. I wonder if he's going to pull a muscle, too, before the end of this is all.
All right, we'll put you out of your misery.
Thank you, David Gura, for mentioning that.
Yeah, thank you, Damon Sassower, Chief EM Credit Strategist, New York Jet fan as well, Bloomberg Intelligence. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, and Lisa. No time to stop with 15 days to go before Election Day. Democratic presidential nominee Vice President Kamala Harris will be in 3 states in one day today. In Pennsylvania, Michigan, and Wisconsin, she'll be out with Liz Cheney. Meanwhile, former President Donald Trump will be in North Carolina today to tour hurricane damage in Asheville. Elon Musk is promising to give $1 million a day to a random registered swing state voter who signs his petition calling for free speech and gun rights. We get more from Bloomberg Government's Jack Fitzpatrick in Washington.
The splashiest thing from the Trump side is not from the Trump campaign right now. It's from Elon Musk's PAC that raises some legal questions, certainly gets a spotlight. Musk, through his PAC, is promising to give away $1 million each day between now and the election.
Bloomberg Government's Jack Fitzpatrick reports the giveaway raises some serious legal questions. Houston authorities said that 4 people were killed when a helicopter crashed into a radio tower Sunday night, causing a fire to erupt. Police said all of the deceased were on the helicopter. Houston Mayor John Whitmire.
The scene is secure, multiple fatalities. Apparently there's a child and it's a horrible thing to witness.
The tower collapsed, spreading debris for about 3 blocks. Secretary of State Antony Blinken is heading back to the Middle East today. Blinken is heading out for a week-long trip to Israel and a number of Arab countries. The State Department says he'll discuss the importance of bringing the war in Gaza to an end, securing the release of all hostages, and alleviating the suffering of the Palestinian people. It comes as Israel weighs retaliation against Iran for ballistic missile attacks earlier this month. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. David, one of the most compelling stories, I think, in global Wall Street over the last 10 to 15 years has been the growth in private credit. Goldman Sachs is out with a private market survey that says many investors think they're underallocated to private credit and are looking for more ways to take a slice of the $1.7 trillion market. This market didn't really exist before the great financial crisis in my mind, but as the banks pulled back for a variety of reasons, regulatory-wise and others, the private credit players are going all over the place.
Just wild to watch this evolution and to see sort of how they're filling the role that banks had been playing. And Mark Rowan of Apollo was on Bloomberg Television, Bloomberg Radio a couple weeks ago talking about this, how Apollo and others just see a huge opportunity here that they've obviously capitalized on in recent quarters, and I think it's only going to get bigger and bigger.
And my question is for a lot of the banks. We're talking to Jamie Dimon and Brian Moynihan. Why are you guys letting these guys eat your breakfast?
Proverbial lunch.
Exactly, because when I was at the Chase Manhattan Bank, we were lending to TMT, Tech Media and Telecom. We were lending against nothing, like airwaves. We had to go to our credit officer. So yes, we want to lend them $1 billion against air. That's our asset. Trust us, it's going to work out. And we made a ton of money doing that stuff. So anyway, private credit, fun stuff. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures lower, and this is on a busy week for earnings. According to FactSet, 112 7 and S&P 500 companies, including 7 members of the Dow Industrial, set to report third quarter results. Among the highlights, we have Tesla, Coca-Cola, and IBM. Right now, NASDAQ futures down 0.4%, 100 points. Dow futures down 0.1%, 80 points. S&P futures down 0.2%, or 17 points. We have the 2-year yield, 3.99%. That's up 4 basis points. The yield on the 10-year, 4.13%, and that's up 5 basis points. To currencies, we have the dollar stronger. Japanese yen weaker at 149.98 against the dollar. The euro, British pound weaker right now. Bitcoin down 0.7% at 68,000. Some deal-making news. Sources say MetLife in advanced talks to buy PineBridge Investments assets outside of China. It's a deal that could be valued at $1 to $1.5 billion. And CD&R said to be near a deal to acquire control of Sanofi's consumer health unit. And finally, shares of Tylenol Listerine maker Kenvue, they're up about 6%. Sources say, tell the Wall Street Journal that activist investor Starboard Value has a sizable stake in the company. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and David.
Tylenol is the wonder drug for me.
Is it really?
I mean, anything I come down with. Couple Tylenol. I mean, I'm going to get diagnosed with some life-threatening illness at some point. I'm like, Doc, don't worry about it. Just give me a couple Tylenol.
Yes.
I'll be fine. We're all good. All right, Lisa Mateo, thank you so much. We appreciate it. David Gura sitting in for Tom Keene. He's on his Vespa somewhere in Rome. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, here's a little-known fact that it's just I've come up with. pound for pound, some of the smartest fund managers I've ever seen come from the University of Wisconsin. I don't know what's going on over there, but they populate most of the Midwest fund managers. Was like some really smart people, and Janet Rilling's one of them. She's head of plus fixed income at Allspring and a graduate of the University of Wisconsin at Madison. I don't know what's going on over there, but they put out some really, really smart people there. Janet, thanks so much for joining us here. You know, in the fixed income space, Janet, I can sit here at a 2-year treasury, no risk, and get 4%. Is that the worst thing in the world, or should I take some credit risk here, do you think?
Well, it's certainly tempting to sit in a no-risk asset in the 2-year part of the curve. And as you talked a little bit earlier in your segment, credit spreads are pretty rich. They're near cycle tights. So that does make it a higher hurdle to take credit risk. But we do think it's time to move off of the front end of the curve. We do know that the Fed is lowering rates. We know where we are in the cycle. We also think we're mid-cycle for credit. And while credit spreads are tight, that incremental income we think is here for some time. So we've been advising investors to be at sort of a neutral weighting for credit. That gives you the opportunity to add if credit spreads widen, but also you're not overexposed.
Let's dig into that just a little bit. You say you know where we are in the cycle. You say we're mid-cycle. What's telling you that, and sort of what is your outlook here for the next few quarters?
Yeah, so let's start with earnings. We have seen decent earnings, and so far this earnings season, they have come in pretty supportive. Also looking at forecasts for the GDP, we're looking at the next quarter coming in around 3%. That is quite supportive for investment grade and high yield companies. That tells us likely we still have time in the economic cycle, and the risk of defaults is not particularly high. That is a good time to have some extra yield in your portfolio. But as investors, we're very sensitive to valuations, and we recognize that we are at long-term tights for credit spreads. So that's what keeps us cautious about going overweight.
Are there any sectors that screen well for you guys in corporate credit, Janet, or is it just kind of across the board? The tightness kind of gives you a little bit of caution here.
We do favor the financials. We think that the risk reward there is quite good. Like everything in our portfolio, though, we're quite diversified. We have exposures to the banks, but also the insurance segment of the financial market and a little bit of REITs. So we think good diversification within the financials is a good place, particularly in the investment grade part of the market, to tilt your exposures.
I wanted to ask you about volatility, what we've seen in recent weeks, how much you expect that to pick up as we head into the election and beyond. So we've had the VIX kind of hovering around 20, moving up a little bit from where it was for several months, really. Your sense of where volatility is now and the likelihood that we're going to see an increasingly volatile market here in the next few months?
I do think that heading into the election here, volatility will stay elevated. And that's part of why we've positioned our portfolios with a lot of flexibility in them. It's hard to predict the outcome of the election, even if you get the candidate right, hard to know if their policies are going to be implemented. So having a flexible portfolio where you can respond to whatever the outcome is, I think is a good way to go into the election. And I think expecting heightened volatility makes sense going into the next couple weeks.
All right, beyond that, Janet, where do you see just kind of risk globally? I mean, is it just simply let's focus on the U.S. because that's where the quality is, or can you look other places as well?
I think you can look other places as well. Certainly, the U.S. economy is quite resilient, and that does make it an attractive place to invest. But being diversified across global economies makes sense as well. We have some allocation to developed market sovereign bonds in our portfolio. So this is a high quality part of the market, a way to go up in quality to get some income. They are very liquid, large developed markets. We also think a smattering of emerging markets can make sense in a portfolio. We currently favor South African local government bonds. That economy, they had a favorable election outcome this summer, and we expect it to result in some positive reforms over the next few years. So, again, the theme in our portfolio is diversification. Having some allocation outside the U.S. provides that additional diversification.
tempted here to ask about those Uruguayan bonds, Paul.
Yes,
I'm going to steer
I'm
clear
checking
of
my
that.
portfolio to see if I
see
ended up
what's in
buying
there. Janet, let me ask you what you're avoiding. So in the effort of diversification, you've kind of ticked through all of the things that you find attractive now. Are there things that you're really just steering clear of at this point? And if so, sort of explain what's unappealing about them at this moment.
So I wouldn't say we're steering clear of anything in particular, but things like high yield are at our lower end of our allocation. That said, within high yield, we do like the front end part of the high yield market. Think of like the short duration, higher quality double B part of the market. There's good visibility into getting repaid from the borrowers, and you can pick up a little incremental income. But we don't think it's the time in high yield to go, deep down the credit stack into like the triple C rung.
How about the mortgage market here? I had mortgage rates coming down nicely, but they've kind of ticked up in the last few weeks here. How do you think about the mortgage back and the agency market?
Yeah, structured product and agency mortgage-backed securities in particular are a favored sector for us. When we look at it compared to corporate credit, agency mortgage-backed securities, the valuation there is more about average, looking over the longer term. So we think that that is a good place to allocate in your portfolio. It's high quality, it's liquid, some incremental yield to treasuries.
I'll ask you lastly just about sort of what you're expecting the Fed to do come November the 7th, sort of your expectation here for what that rate cutting cycle is going to look like.
Yeah, we don't differ much from the market. We think 25 basis points is a likely outcome. I think the Fed has communicated that they're interested in moving off of the more restrictive level of policy rates. They don't want to be the one causing the economy to have a downturn. On the other hand, we've certainly seen the resiliency of the economy, so that has put into question a little bit the size and the timing of their rate cuts. But I think a 25 basis cut in November is a likely scenario.
Janet, thanks so much for joining us. Really appreciate getting your time. As always, Janet Rilling, she's head of Plus Fixed Income at Allspring. Those are some of the former strong asset management folks there that are over at Allspring in Milwaukee. One of the best things I've done in Milwaukee is go to their winter carnival. It's like February, and it is no kidding 20 below zero.
Is that right?
But that's
people are fortifying themselves, so they're staying warm as they can.
If you want to get the II vote out of strong capital management, you go to the winter carnival in February. You don't go in July or June when it's
put on the down coat and the other down coat.
Exactly. That's how you do it. That's how I did my career. Then conversely, you go to Houston in July, and that's when you get the II vote there. That's what it's all about. Janet Rilling doing all the fixed income stuff there at Allspring. Looking at the futures market, the S&P just kind of off about 16 points. The Nasdaq's off about 93 points. That's about a 0.5%. We'll keep an eye on that. 10-year Treasuries about 5 basis points higher, 4.13%. Gold, 27.52, at or near another record. WTI crude oil higher as well today. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling, and this is after the S&P 500 capped its longest run of weekly gains this year. Goldman strategists warn U.S. equities probably won't sustain their above-average performance. We also have more economic data on tap this week. That's including the Fed's Regional Economic Survey, the Beige Book, that's on Wednesday. Also this week, existing home sales, new home sales, factory orders for durable goods, and also a read on sentiment. Right now, NASDAQ futures up down 0.4%, 91 points. Dow futures down 0.1%, 69 points. S&P futures down 0.2%, or 16 points. The two-year yield 3.98%. That's up 3 basis points. The yield on the 10-year 4.13%, and that's up 4 basis points. A few companies making news. Microsoft, the company said it's launching a set of AI tools that are the next step up from its generative AI Copilot. Now that puts more pressure on rivals like Salesforce. And Walmart, it reached a proposed settlement over 3 shareholders' lawsuits related to its distribution of prescription opioids. And finally, shares of Humana up more than 4%. This is after a Bloomberg report that Cigna has revived efforts to buy it. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Bloomberg Surveillance today is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. This is not going to be a good segment. I am sandwiched between 2 Carolina people, David Gura, who grew up in North Carolina, Chapel Hill, and Callie Cox, who is a proud graduate of the University of North Carolina at Chapel Hill. She's also the chief market strategist at Ritholtz Wealth Management. So, Callie, I mean, I've got a stock market. I'm not jumping off yet. I mean, should I be jumping off here? I'm sticking with it.
Well, the economy looks okay, so I don't think you should be jumping off.
Okay.
And better yet, expectations are so low that I think it could lead to more of a rally in the future. I mean, of course, everybody's nervous about the election coming up, and we're seeing some premium in the VIX and in the 10-year because of that. But at the same time, I mean, post-election rallies are quite typical. We're heading into an earnings season where estimates have been cut way too much, and up until a few weeks ago, everybody thought we were heading for a recession, and it turns out maybe we're not. So it's all about expectations.
Early days yet in this earnings season. I guess 113 companies reporting this week. What have you been able to divine from what we've gotten thus far from the financials and others, and sort of what are you looking for as we get kind of more fully underway in the reporting period?
Well, obviously, earning estimates were way too low. On the revenue side, on the earnings side as well, that's why you're seeing about an 80% beat rate, and why you're seeing stocks react really well when companies come out with these, not impressive results, but at least they kind of hurdle the low bar. I really like the management commentary that we've heard so far. I feel encouraged by the bank commentary around the economy, around the consumer that we've heard. I'm more macro, so I don't look as much at individual companies, but so far, so good. I mean, that beat rate is strong.
Valuation. What are the concerns, if any, here for you for valuation for this market?
Yeah, well, I think valuation is a distraction for people. So obviously the S&P valuation is quite high, but when you take out tech, the S&P sits around like a 19 forward PE, and that's actually quite low. I mean, if you think about it, the average for that is around 17 historically. So what I'm trying to say is that there are a lot of opportunities in this market if you're willing to look for them. Valuation isn't a concern for most stocks. You just have that influence from big tech. Just kind of clouding the valuation picture that you're seeing for the overall S&P.
So if I'm looking for them, where would you guide me, or where would you recommend that I go? Maybe kind of unloved places that might be overlooked.
Well, we've been talking about the S&P. I'm going to look outside the S&P
Please.
now.
Okay.
I think you have to look at small and mid caps, especially if we think the economy can survive these high interest rates. I mean, small caps were a rate story, but they need a strong or even an okay economy to really thrive in this environment. I mean, normally we see small caps outperform in the first legs of a bull market. We haven't seen it this time around. It's because the Fed has been restricting the bull, kind of depriving it of oxygen through higher interest rates. So small caps, mid caps, I think rate sensitive sectors are dealing with the same fate right now. I think cyclicals look interesting, but I'm not as excited to jump into them because we've only seen 1 month of relatively okay jobs data.
Sectors. Are there sectors that screen well for you guys these days?
Well, we like looking at value over at Ritholtz. I mean, you have to remember long-term clients, trying to get them from point A to point B. I think value in general is really interesting right now. I think we see some value in real estate, in consumer staples, again, in those rate-sensitive sectors. See a lot of value in small caps, like I mentioned to David. I mean, overall, just look at the unloved sectors in this bull market. What hasn't performed well, rotate there.
I'm very careful asking everybody about this, just sort of how the role of the Fed is sort of dovetailing with what you're doing. And so it just strikes me as you kind of look ahead to the election and beyond, this kind of monumental uncertainty. How do you see around that? How does the Fed see around that? Again, I bring this up over and over again today, but it's like, how many Fed speakers are speaking? I remember we heard from Austin Goolsbee a couple of weeks ago saying he loves getting all of those perspectives. He thinks it's valuable. How are you able to sort of divine any sort of sense of direction from what all these folks are saying? And what is it telling you if you are able to?
Well, our clients are lucky. They have me. I'm the one that's stressing out over these headlines.
You have to figure it out. Yeah.
And trying to put all the tea leaves together, but ultimately reminding people that these headlines, these Fed speakers, probably won't push you off of your financial goals. Of course, the Fed and what the Fed does is important, but what you're hearing from Goolsbee, and no offense to Goolsbee, I love Goolsbee, but what you're hearing from these Fed speakers ultimately is noise. Of course, Fed policy is important, but right now it looks like the Fed is cutting rates gradually. I think they have an argument to cut to neutral at the moment, especially if we see job market data, kind of addling along like we've seen for the past few months outside of September. And, a gradual cutting is a really good background for the stock market, but it also means that you probably need to lock in rates and prepare for a potential crisis. Take advantage of where we are now.
Callie, I know you mentioned Ritholtz Wealth Management. You guys think longer term. We've certainly heard that from Barry Ritholtz himself. How do you guys think about stocks versus bonds, maybe even alternatives for a typical Ritholtz Wealth Management client?
Well, I mean, we offer, I think, 6 or 7 different portfolios, different stock and bond allocations. That ultimately matters most for the client and their personal situation. Again, right now with bonds, we're telling clients to think about locking in rates. We don't think they'll stay here for very long. On the stock market, I mean, obviously, we think you need to be invested in riskier assets to reach certain financial goals. And, depending on where you are, if you're an accumulator, if you're, pulling more income from your portfolio, that's going to change the allocation you're looking at. But right now, we still think the stock market is quite attractive. We always remind people it's expensive to miss a bull market. So, the risk of sitting out most of the time is bigger than the risk of potentially buying at a top. Just make sure that you have that cushion in your portfolio, because we all have emotions. We're all human. We need a little bit of that protection if we do see a bigger sell-off.
Could you give us some insight into those conversations? Because as you say, it's costly to miss out, but you look at how much money is sitting on the sidelines. You're trillions of dollars on the sidelines, and so much in money market funds, so much in bonds. How do you compel people, or what are the conversations like as you're trying to convince people that there is still opportunity in a moment to get into equities?
Well, there's a lot of talk around big tech. I mean, that was more of the talk in the first half of the year. Why are so few stocks driving this market higher? Obviously we have an eye toward value, so that was a harder conversation to have with clients. But ultimately, we reminded them that, over time, there's this area of stasis, and the market tends to go there. You just have to, kind of wait it out and be prepared for a bunch of different scenarios, and that actually worked out really well over the past few months. And we're seeing, as the Fed has cut rates, we're seeing more money, of course, go to those value-oriented stocks. But on the whole, I agree with you. There's still a lot of cash on the sidelines. I don't think it's a positive catalyst in the next 3 to 6 months. I think there's a lot of inertia there, but that's something to consider. I mean, this bull market has grown on doubt and skepticism, and believe it or not, that's a healthy environment for higher prices.
I'm sure your clients are calling up all the time, asking about the election and what they should do. I mean, what do you try to tell them?
Well, politics don't matter for your portfolio.
Okay.
Bar none. There are a few caveats there. I think they matter for your financial situation, especially with the Tax Cuts and Jobs Act. Certain provisions there expiring at the end of 2025. So that's mostly what we've been talking to clients about. I mean, you need to plan now for any changes that could happen in the next, several months. But on the whole, we remind our clients who are more long-term that, it's one person can't control the $57 trillion stock market. Maybe Jay Powell, but I'm not even going to go there for him. trying to buy or sell stocks depending on who's taking office is usually a fool's errand.
Can we get a little anecdotal sense from you, a North Carolinian like myself, for like what this election, what this part of the campaign cycle has been like? How inundated are you just as a citizen of that state? And sort of what is the electoral atmosphere like?
Even better. Right I'm a resident of Mecklenburg County, which is one of the most important counties in North Carolina. There's a lot of noise, a lot of signs. Obviously a lot of conversation. I can't really get into, I'm not a pollster, right? I'm watching the polls nervously like everybody else. But just know that people are paying attention, and I think that there's a lot of energy around both sides.
Callie, thanks so much for joining us. Always great to see you. Callie Cox, Chief Market Strategist for Ritholtz Wealth Management, joining us here in our Bloomberg Interactive Broker Studio with our news in New York City. Here's Mike Barr.
Thank you very much, Paul, David, Lisa. With just over 2 weeks until Election Day, the presidential candidates were out in force over the weekend. Former President Trump manned the fryer at a campaign appearance at a McDonald's in Pennsylvania. Vice President Kamala Harris went to church in Georgia for an event that was also featuring a performance by Stevie Wonder. Today, Harris will visit 3 battleground states, Wisconsin, Pennsylvania, and Michigan. Donald Trump will visit North Carolina today. Meanwhile, Elon Musk is promising to give $1 million a day through Election Day to random registered swing state voters who sign his petition supporting the First and Second Amendments. Veda Partners managing partner Henrietta Treyz says this could raise legal questions.
It's illegal to buy votes. And so what Elon Musk is doing is he's buying signatures. He's trying to get you to sign up to support the First and Second Amendment. He's also trying to get you to sign up to register to vote. That is a technicality that is different than actually buying your vote on Election Day. So he's circumventing that part of election law. Democrats are, of course, screaming about it because it's designed with a monetary value behind it, and it's about voting. So they're trying to get the Elections Commission involved.
Henrietta Treyz of Veda Partners was on Bloomberg Surveillance. 7 Israeli citizens have been arrested on suspicion of gathering intelligence on behalf of Iran. Israel's police and internal security agency say in a joint statement the 7, who are Jewish residents of Haifa and the North, are accused of carrying out hundreds of information gathering tasks on military bases throughout the country in exchange for hundreds of thousands of dollars. President Joe Biden's administration unveiled a proposal today that would require private health plans to cover over-the-counter contraception at no additional cost to consumers. With the FDA's approval of Opill, the U.S. joined more than 100 countries where birth control is already available without barriers such as doctor's appointments or parental approval. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Hi, Michael Barr. Thank you so much. We appreciate that. Bloomberg Surveillance today is brought to you by Build America Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM insured bonds. Very interesting reporting coming out of the New York Times, David. In a board shakeup, James Gorman, a director in charge of planning for a successor to the chief executive, Robert Iger, will become chairman of the Walt Disney Company January 2nd, 2025. Disney said on Monday that it would name a new chief executive, quote, in early 2026.
They'll try again.
Yep, again.
Iger will leave once again, I guess.
We'll see. Who knows? And so there are some internal candidates there. They've kind of got 4 of the insiders kind of vying for it. But they also say that they will look at external candidates as well. But obviously, James Gorman has a phenomenal reputation on global Wall Street. So the fact that he's in charge, he's responsible for picking for the process and picking a CEO, and now is putting out some time frame. Presumably that will put a little bit of more.
Engender some confidence in investors. James Gorman replacing Mark Parker of Nike chairman, who is stepping down after I think almost a decade on the Disney board.
Yep. So we'll see there. But again, getting a little bit more clarity on what might be some succession at Disney. They've had a little bit of a problem with that in the past. S&P 500 futures, they're all 15 points. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures leading the losses before the bell right now, down 0.4%, 90 points. Dow futures down 0.1%, 49 points. S&P futures down 0.2%, or 14 points. We have the two-year yield, 3.99%. That's up about 3 basis points. The yield on the 10-year, 4.13%, and that's up about 4 basis points. To commodities, gold trading record highs amid tensions in the Middle East, also ahead of next month's presidential election. Right now, we have Brent crude up more than 1.5%, $74 a barrel. WTI crude, $70 a barrel. We have spot gold higher, $2,739 an ounce. On to currencies, the dollar stronger. Japanese yen, euro, British pound weaker. We have Bitcoin down nearly 1% at around 68,000. Few companies making news. Sources say Vision Fund 2 backed Perplexity AI in talks to raise funding at a valuation of about $9 billion. And JP Morgan hired NOAA chief scientist Sarah Kapnick as global head of climate advisory. And finally, as Paul mentioned, yes, Walt Disney named Morgan Stanley executive chairman James Gorman chairman of its board. It also says it plans to name that new CEO in early 2026. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Looking at the S&P 500, it's up about 23% year to date. Solid performance there. You look at the equal-weighted S&P, up about 15%. So, again, some underperformance on the equal-weighted index. The question is, will we see some broadening out and maybe even some more broadening out in performance of the S&P 500? Let's talk to somebody who is in charge of this stuff. Phil Palumbo, he's the founder, he's the CEO, he's the CIO. I think that makes him the boss at Palumbo Wealth Management, the name on the door. Hey, Phil, should we expect this market performance to broaden out here, or do we just sit, on the Mag 7? How do we play this market from here?
A couple of things. First, the market in the short term, I think, is overbought. And, you have forward multiples at 23 times. And at those levels here, I think that with new capital, you definitely have to dollar cost average in here, over the short term. And then I think volatility will pick up as we get closer and closer to the election. So in the short term, I think we're overbought. But thinking out, going out 12 months, there are two key things that I always look at. Number one is, what are earnings estimates? And earnings estimates are around 9-10% for 2024 and about 12-13% in 2025. Even if earnings estimates are off by 7 or 8%, which is about the average they are normally off, you still have a positive backdrop as it relates to earnings estimates. And the second most important is, what's the Fed thinking? So obviously we have a Fed that's now accommodative, which is a change versus March of 2022 up until the last decrease in interest rates. And that's another positive, favorable backdrop. And as long as we don't have any type of recession, which we're not anticipating. So Paul, for those two reasons, I can see stocks continue to perform well as we move into 2025.
Phil, let me ask you about AI. And so we're talking about broadening out. There was so much interest in artificial intelligence, the degree to which it intersected with these other big tech stocks. We've been kind of waiting for the moment when that jumps to other companies, and we see the broadening just in that space alone. How are you thinking about AI now? And when you look at that broadening out, how much of it is going to intersect with or involve AI technology?
Yeah, so people have to understand that from the AI standpoint, there's tons of investments in hardware, which will eventually go into applications and software. That's kind of the next phase of this. So right now, when you think about the Mag 7, which you asked about, right, you're still seeing great growth in those stocks. And those are great businesses that will continue to be great businesses, for the long term. So I still continue to see, positive growth in those particular businesses. Right now, what I think makes a lot of sense and kind of the way we look at things is I do see a broadening out happening. If you look at the last 6 months, you've seen mostly value right now in line with the S&P 500. So I see a barbell approach where you have kind of a core group of stocks is the way we run money. We got quality businesses, lots of free cash flow, high returns on invested capital, and you barbell that with the Magnificent Seven. Because this artificial intelligence is going to be bigger than the internet. It's something that is going to be explosive, I think, for the economy, explosive for companies that are going to be instituting AI into their businesses to increase productivity, increase margins. So I think we're in the beginning phases of this, and we can continue to see this going forward. Now, listen, is there going to be a day where NVIDIA is going to go down 50% and some of these other businesses? Yes, it's going to happen just like back in the late 90s, right? But overall, these are attractive spaces, and they're going to go through the cyclicalities and the ups and downs of the markets like any other time frame.
Hey, Phil, for those folks that are maybe looking for value in this marketplace, one of the industry sectors I've heard of is just kind of broadly defined healthcare. How do you guys think about healthcare, and how do you break it down into some smaller parts?
Yeah, so healthcare is a very attractive space for a couple of reasons. Number one, you have an aging population, right? Number two, you have a lot of these companies are flush with capital, right? So J&J is a business that we currently own right now. They're estimated to have $20 billion in free cash flow over the next 3 and 4 years. Pfizer, same thing. So a lot of these businesses are flush with free cash flow, which means they have the ability to buy back stock, make mergers and acquisitions, make acquisitions. So J&J bought a rare disease company called Momenta, $6.5 billion. And rare disease space is an area that we're going to see really some nice growth in that particular space. So these businesses have come down in valuations because investors have moved away from healthcare and the more defensive areas and into technology, which makes obvious sense because that's the area that's really grown from an earnings perspective. But healthcare over the next 3 and 5 years, especially at the valuations they're at right now, because interest rates up and regulatory issues that surround that particular space and more normalization post-COVID, they've come in at attractive levels. And you think about the future of healthcare, I think it's very, very bright, especially with the medical advancements now with AI. So very attractive at these levels.
Paul, I'll put a shameless plug in here, but I spent some time with Joe Walk, the CFO of Johnson & Johnson, the CEO as well, Joaquin Duato, and we talked a lot about...
And where are they based? Oh,
in New Jersey. We talked a lot about what Phil is mentioning there. That is how they're facing these patent cliffs, how they're looking at merging these kind of biotech and pharmaceutical businesses. So I commend you to the Chief Future Officer show I did with the both of them. But Phil, let me ask you about the health of the consumer today and how you're thinking about that. Callie Cox here just a moment ago talking about how when she looks at the earnings that we've gotten from financials thus far, she's largely in agreement with what they're saying about the health, the resilience of the U.S. consumer. Do you feel similarly, and how's that kind of shaping your perspective on stocks that you find attractive?
Yeah, for some reason, you can never count the consumer out, right? No matter how many times that analysts and research that we read, is trying to count the consumer out, for some reason, they continue to push forward. You looked at the retail sales is very positive. The thing that I'm concerned about was the labor market starting to cool. But the last print that we saw was actually pretty positive. So the rate of change in terms of the job market started to decline, scared people, but then the last print was pretty positive. So keeping an eye on that obviously is going to be important. As long as people have jobs, they have the ability to spend, and the retail sales numbers prove that. So, and then the second thing is the capital and money from COVID, and we're starting to see that as pretty much diminished to zero. So the question is will the consumer continue to have firepower? And my view is it's something definitely to look at, and the jobs market is the number one thing that we're going to continue to look at. But for right now, they remain resilient.
Hey, Phil, back to healthcare. You mentioned biotechs. Let's be honest. All you do is throw darts at a dartboard when investing in biotech. How do you try to figure out how that stuff works?
Yeah, so it's definitely a very difficult environment to get it right and pick the right businesses. So we feel we do have it right? So we have an emerging growth strategy, which is the Palumbo emerging growth portfolio. And within that portfolio, 50% is biotech stocks. Wow. And we hired and partnered with a portfolio manager who manages a hedge fund. And he's been in this space his entire career. He had a pharmaceutical company himself, and he sold a pharmaceutical company. He invented a pharmaceutical drug, again, which he sold. And so he understands the FDA process. He understands management is the key to picking the right businesses, and he can see right through management. So if you have the right person on your team, that's really the key. But it's, Paul, to your point, it's definitely not easy, but he does a great job. He's got a proven track record, and we really rely on him to get that right.
Yeah, it's when I look at the biotech stocks that I'm just seeing in the news every day, it's binary. Either you win, and then you win big, or you lose, and then you lose it all. So Phil Palumbo, hats off to you, Phil. Phil Palumbo, founder, CEO, and CIO of Palumbo Wealth Management. So just looking at the markets there. But again, I love seeing these biotech deals because, they're at some stage and then the drug works and then the stock goes up. Or, a Roche or J&J comes along and buys them for 3x the target because I think the next test is going to go well and all that kind of stuff.
And it's a gamble for these pharmaceutical companies, the kind of time horizon they're dealing with and the amount of investment they have to put into the front, hoping with crossed fingers it's going to work out in the end.
That's why I think the hedge funds have always trafficked in the biotech to get the big returns. Hats off to them. I couldn't do it. All right, we're going to have more coming up. This is Bloomberg. Good morning.
Three little birds fits by my doorstep, singing sweet songs of melodies pure and true, saying, "This is my message to you."
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Sylvia Jablonski, CEO at Defiance ETFs, get her thoughts about these markets. Nimmer Kang, CIO at North Star Asset Management. He's going to get his thoughts on U.S. economic growth and kind of where these interest rates are going. And then all Acela-dependent timing. Eric Balchunas, senior ETF analyst. We kind of pencil him in for Monday at 9:45. It all depends whether Acela from Philadelphia is running. Acela is the Amtrak train to get you up and down the Northeast in the U.S. So we have that to look forward to. But first, right now, let's go to Lisa Mateo. Get a Bloomberg Business Flash, Lisa.
You got it. We got futures falling as a busy week of company earnings starts to heat up. Traders awaiting reports from Tesla, Boeing on Wednesday, as well as a bunch of other companies throughout the week. Companies like General Motors, IBM, Unilever, Deutsche Bank, and Coca-Cola. Futures, we have NASDAQ futures down 0.4%, 81 points. Dow futures down 0.1%, 49 points. S&P futures down 0.2%, or 13 points. We have the two-year yield, 3.98%. That's up 4 basis points. The yield on the 10-year, 4.13%, and that's up 5 basis points. To commodities, oil climbing. Gold touched a record, rising tensions in the Middle East. We have Brent crude up about 1.5% at $74 a barrel. WTI crude, $70 a barrel. We have spot gold higher at $2,738 an ounce. Shares of Boeing up nearly 3%. Union workers worked out that tentative agreement with the company, raises pay by 35% over 4 years. But the machinists, well, they still have to approve that deal. They vote on Wednesday, the same day that Boeing actually reports earnings. Spirit Airlines up 36%. It struck a deal to extend a key debt refinancing deadline to late December. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. Tom Keene is on vacation somewhere in Europe. David Gura sitting in for Tom Keene, doing his best. He's trying, folks. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Tuesday, November 5th, 9 p.m. Are we going to know anything, do you think, David?
That's when the polls close in a number of states on the East Coast, so stuff will begin to trickle out. But I think that from everything I've heard, there is going to be so much fastidiousness about counting votes, making sure that it's accurate, and then on the heels of that, there's going to be so much pressure from both campaigns to make sure everything's on the up and up. I think it's going to be a couple of days before we feel kind of solid about the outcome. That's just a gut guess at this point.
Yeah, it's kind of what I've been hearing from a lot of folks, so we'll see how that plays out. I'm sure Bloomberg, we will have complete coverage of that. You know that. Sylvia Jablonski joins us now. She is the CEO and the CIO of Defiance ETFs. Sylvia, I'm just going to start. We're starting to get into the teeth of this earnings here. What have you seen so far earnings-wise? What do you think this market needs to see earnings-wise? Because we got a market that's up 22, 23% this year.
Yeah, good morning. Great to be here. Well, I think, we've seen about 14 to 15% of the S&P 500 report already. And, close to 80% of the names are beating expectations. So that's a good thing. I think that that's in line with kind of the tailwind that we needed to keep the indices roaring into the end of the year. Another good thing, though, I think, is that in midsummer, we had earnings, we had expectations to improve by about 7% or so, and now we're down to about 4%. So the bar is lower for a lot of these companies to meet and beat expectations. I also think that what we're going to see this earnings season and what we're starting to see, particularly with the banks, which performed well, is perhaps a broadening of beats and positive earnings. So looking outside of the Mag 7 to see what different indices and different sectors do. Overall, I think it's going to be a strong earnings season, and I think it's going to support the performance of the S&P 500 so far.
As you've lent an ear to the commentary that we've gotten around the earnings that we've seen thus far, mostly from financials, what stands out to you, and sort of how does that inform your sense of what we might hear from other companies and other sectors going forward?
Well, I think what stands out to me is that the sense of a soft landing remains intact, right? So the consumer continues to spend, the consumer remains healthy. We've seen some upward movement on wage growth, or at least steadiness in wage growth, and that's supporting spending. It looks like institutional business is picking up, particularly trading, when we heard from some of the banks. And overall, I think tech earnings are going to tell us a big story. Netflix was the first one, although, they're kind of their own niche in terms of reporting earnings. But it was good to see one of those big tech heavy type of names come up with such a great earnings report and strong consumer support and consumer spend in their report. So I think it bodes well for the soft landing.
Technology. It has been a leader of this market over the last, 15 years plus, maybe even longer than that. How do you think about tech here, and how much of your tech call is an AI call?
Yeah, so my tech call for the last couple of years has been an AI call. We actually launched an AI ETF in 2018, and we were a little bit, too early. But and ChatGPT moment happened a little bit later than that. But we were like all in on tech and quantum computing for a long time. So I think that it's just coming to fruition, right? So all of these AI companies, and I think the running water of AI is semiconductor companies, are poised to do well. I think they're going to continue to perform for the next 5 to 10 years as AI becomes an actual tangible thing that starts to show, profits, cost reduction, and things like this on, across all sectors, right? So when tech has a down day and pulls back, I'm getting back into tech. But what I am also doing for the first time, and I haven't done this in about 3 or 4 years, is really starting to diversify now ex Mag 7, right? So it's so interesting. If you look at some of the names out there, like utilities is outperforming the S&P 500, and some of these names in the energy space, like Constellation, Vistra, GE Vernova, they're outperforming NVIDIA in some cases, right? Eli Lilly's having a great year, Costco. So I'm starting to look at these other companies that, all 493 of them that we just haven't talked as much about, and trying to pick up some X-Mag to broaden out the portfolio now.
With all due props for starting that ETF, the AI ETF, early, let me ask you just how it's evolved in recent years. And you mentioned a couple of names we've heard so much about, NVIDIA chief among them. How has it changed? And when you look at sort of the broadening of AI in particular, is it into utilities because of the power that's going to be needed to power all the computing technology behind AI? Or where has it kind of moved to, and how do you see it evolving further?
So what's super interesting is, in short, like, it hasn't evolved that much in terms of who the top players are, right? They still are the Mag 7. They still are NVIDIA, AMD, Taiwan Semiconductor, ASML, Qualcomm, Broadcom. These are the names that they kind of dabbled their feet into it, and then they became the leaders of AI, and here we are with them leading AI. And so I think, though, that it will develop over time as some of the smaller cap players, particularly with rates coming down, start to perform. So, we have names like D-Wave, we have names like IonQ, Ambarella, some of the smaller types of names that investors don't think about are in our index. And these are the names that are starting to show some performance now, and they're starting to get some momentum. Super Microcomputer is another great example, right? Like, that's a stock that nobody talked about. And this year it just, absolutely took off. And then it actually, absolutely kind of like crashed down after the Hindenburg research report, but a company that's, kind of known for AI and providing to data centers of the top Mag 7 companies, also for energy efficiency, cooling, and things like this. So I think that a lot of these smaller names that have come out of the woodworks this year are going to become larger names in coming years. And that's how it'll evolve, right? And then they start getting bigger positions in ETFs.
All right. I'll tell you one area where I am completely confused. Maybe you can help me out here. Semiconductors, the chips. ASML comes out with a cautious outlook. People get all concerned. Then our friends in Taiwan come back and say, no, things are okay. How do you think about the chip business, and what does that mean for the broader tech space?
Yeah, I mean, I have to think that, the chip business is okay, right? If you think about what needs to happen in order for AI continue to grow and for this data to be processed and for quantum computers to work, data centers to work, driverless cars, smart cities, things like this, even 6G innovations, right? You absolutely need semiconductors. So there will be, peaks and there will be dips in terms of demand and spending and things like this, right? I think a lot of these companies are spending up front, and then we're going to, kind of see them actually implement it. And so we'll see pauses and things like this over time. But AI is in its infancy. As I said before, like the XMAG sectors, they haven't even really started with AI. You think about the impact on healthcare, on utilities, on different areas of the market. And I think that they'll continue to grow, but it's not just going to be linear at this point, right? We got that initial hype pop, and now I think it'll kind of be a stable growth story over time. But, when I think about semiconductors, I listen to Jensen Huang, I listen to NVIDIA, and it's hard to ignore what he's saying, right? I mean, he had that clarity on what the orders are and Blackwell chip demand and things like this. And so that tells me that there's still a lot of steam out there for these chip companies, and maybe they're not all winners, right? Intel's another one. Yep. Intel's got to, start to come out of the woodworks a little bit too and perform with the top semiconductor names. So it'll be interesting to see what happens.
All right, Sylvia, thank you so much. Always appreciate getting your thoughts. Sylvia Jablonski, CEO and CIO of Defiance ETFs. NVIDIA stock is pretty much kind of futures are unched on the day. It's up 178% year to date. It's got a market cap of $3.4 trillion. Wow. So when I guess Jensen Huang speaks, people pay attention. He knows what he's talking about. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. Early voting is underway in most states with a little more than 2 weeks until official election day. Veda Partners managing partner Henrietta Treyz says the early vote is setting records in Georgia and North Carolina, and Republican voters are turning out in higher numbers than Democrats in some key battleground states.
That's the case in Nevada, for example, which I was just spending some time with this morning. And effectively what's happening is Republican voters have been, very exposed to this idea of a election that may be stolen and what have you. The Republican governors in those states and Republican operatives like North Carolina, Georgia, and Nevada have been spending millions of dollars trying to encourage their voters to come to the polls early. And that is really panning out.
Henrietta Treyz of Veda Partners. Today, Vice President Harris will campaign in Pennsylvania, Michigan, and Wisconsin with former Republican Congresswoman Liz Cheney. Former President Trump will be in North Carolina. An investigation is underway in Georgia where a catastrophic dock collapse took place on an island south of Savannah, killing at least 7 people. Several more people were injured. McIntosh County, Georgia official Kate Karwacki says that President Biden has called to offer his support.
I've personally had telephone calls from many elected officials from every sector, beginning with our president on down to fellow commissioners in our neighboring communities.
Officials say the ferry bridge was built at the end of 2021, which raises questions about why it would fail so soon. A federal judge will hear arguments today on whether to temporarily block a new Louisiana law requiring the 10 Commandments be displayed in every public school classroom by January 1st. Opponents say that the law is an unconstitutional violation of separation of church and state. Proponents argue that the measure is not solely religious, but that it has historical significance to the foundation of U.S. law. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Michael Barr, thank you so much. We appreciate that. The big take stories that Bloomberg News cranks out every day are phenomenal reporting. And I don't know how they do it. They do it on a daily basis. Today's another good one. The climate short. Hedge funds pile up huge bets against green future. The fast money on Wall Street has taken a close look at key sectors in the green economy and decided to bet against them. have we hit peak kind of, I don't know, ESG, the green future, all those things? It seems like the tide has turned.
You have teed up another shameless plug for me. We have a podcast on this coming out today, but the story there is that we've seen this fundamental shift. Back in 2021, there was so much enthusiasm for ESG from so many people, Larry Fink among them.
Yeah.
That has really shifted, and so now we have more hedge funds going long on fossil fuels, which is a surprising thing. They're short on green tech and long on fossil fuels. So we'll see where this leads. But that's where things stand.
Yeah, it's interesting. It just feels like coming through the pandemic, you kind of need both. I think. I don't know how to play
fossil fuels aren't going away entirely.
No, they're not going away soon, and we saw that with Russia's invasion and what that means for Russian gas for Europe. So we'll have to see how that plays out. But the big take story. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, and we've got futures falling after the S&P capped its longest run of weekly gains this year. We have NASDAQ futures down 0.3%, 64 points. Dow futures, little change, down about 32 points, and we have S&P futures down about 0.1% or 10 points. The two-year yield, 3.99%. That's up 4 basis points. The yield on the 10-year, 4.13%, and that's up about 5 basis points. To currencies, the dollar stronger, Japanese yen weaker at 150.03 against the dollar. The euro, British pound weaker. We have Bitcoin down now more than 1%. It's lower after flirting with 70,000. Right now, it's at around 67,000. More Fed speak. Lori Logan repeated her call for U.S. Central Bank to lower interest rates at a careful pace. And finally, some deal-making news. Sources say insurer MetLife in advanced talks to buy PineBridge Investments assets outside of China. It's a deal that could be valued at $1 to $1.5 billion. And shares of Tylenol Listerine maker Kenvue up nearly 6%. Sources tell the Wall Street Journal activist investor Starboard Value, well, it has a sizable stake in the company. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for one Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube. So head over to that internet thing and search youtube.com, search Bloomberg Podcast, and that's where you'll find us. Liz McCormick joins us. Man, what a day that is. You get Liz McCormick, Chief Correspondent, Global Macro Markets for Bloomberg News in our studio. Liz, I'm trying to refinance my mortgage here, but you bond people are not helping out here. What is going on in the bond market? Is the bond market just... Where are we here? I thought the Fed's cutting rates. Why do I have a 2-year at 4%?
I have a lot of friends who want houses, and they're like, I missed that little window. And mortgage rates kind of kick back up because, I mean, reality is the data has been pretty darn good, right? We had, that start of some weakening employment didn't pan out to last, right? So people are saying, well, hey, maybe, the Fed did this big 50 basis points cut. Maybe they only need to do one more this year, And then what's looming on there? The election, right? And people starting... I have nothing. I have no secret information, but people looking at the betting odds and different things, and that former President Trump may win, and fiscal policy. So, long rates are kicking up, and rates across the curve are up today. So, it's a little bit of a worry that, yeah, maybe the soft landing is good, but not so good for the bond market.
How widely held is the optimistic view that the soft landing is going to happen? So, we've heard from Jay Powell some confidence that that's the direction that we're going, and certainly a number of these policymakers who sit with him around that table in the Eccles building feel similarly. Is there widespread, I won't say unanimous optimism about it, but how widespread is it?
Well, I would say there's still some uncertainty, right? But let's say 4 or 5 months ago, I feel like more of the bond investors were saying, hey, listen, this doesn't really ever pan out too much. We're really hedging a hard landing, that recession still comes. I think that's waned a bit. So some of those, call it tail risk hedging, is gone down a little. But I do think it's not a fait accompli, but more and more people are saying, maybe they can do this. Like they were just mentioning Lori Logan. She's saying, let's go gradual. I do think there's a groundswell of feeling that the Fed wants this desperately, right? And that they'll be careful. We saw, I don't think many people, well, some, not everyone was looking for 50 basis points, right, at that. So the Fed has shown that if they have to go big, they will. But so I would say it's more people saying soft landing, still some hedging out there.
David? Both Lisa Mateo and Liz McCormick, both proud graduates of Rutgers University, the state university of New Jersey.
Bless Rutgers.
Hey, Sunjay, as we locals call it, State University of New Jersey. Liz, talk to us about, never heard that before, Liz? Yeah, you gotta be, yeah, I've been around a little longer. So Liz, are the bond market folks that you talk to, are they just on the sidelines until David Gura can get this election behind us? I mean, what are they thinking about that kind of risk?
Well, I mean, I don't think so. I think, yeah, people are, let's say getting closer to home. They're not going so far over their skis, but there is a lot of people who see, let's say, a trade, although I know it's had its trouble, a steeper yield curve. Things like that. We've already gone from deeply inverted to positive. Yep. Not a heck of a lot positive, but we're positive in the 2s and 10s. That people think, we're going, I won't say who, but we sat down with some of the big asset managers the other day, and they said, listen, we've looked at the election, usually only affects things for maybe like a month. We're long-term investors. So yeah, we're going to trade around volatility, but we have these structural views. Like many think like now maybe Europe is in a worse place, right? So the ECB cuts faster than the Fed. So there's a bit of that divergence trade going on. People thinking that maybe we like German bonds better than treasuries, that kind of thing. And then you have a lot of people leaning into a strong dollar, right? Remember the dollar smile theory, our friend Stephen Jen. But if there's uncertainty around the election, that's good for the dollar. If they get the soft landing, it might be good for the dollar. So I think I wouldn't say people are doing nothing, but we sure would like. November 5th week is a lot, right? It's the election, 2-day Fed meeting.
Yep.
Payrolls, right? Will we
Lest
all
we forget,
survive?
yeah,
Right?
in that order.
Vacation that weekend.
We talk a lot about politics. We see Fed Chair Powell kind of rejecting any assumption or indication that the Fed might be swayed by the political winds at that meeting on the 7th of November. I'm curious if these large asset managers, how they react to what we've heard from former President Trump when he spoke, as he did with John Micklethwait, our editor-in-chief, just about the prospect of him advising or offering his opinion on what the Fed should be doing going forward. So this kind of erosion of Fed independence, potential erosion of Fed independence. How do they game out what that might mean for the bond market? Does it make U.S. Treasuries less attractive if that were to be the case?
It's so interesting you bring that up. Because I was watching, that interview with our esteemed editor-in-chief and former President Trump, and when he said those things, I was looking at, like the markets that price in Fed pricing, and I was like, oh, are they going to move at all? Because obviously he wants to lean softer. They didn't really react. So I think right now they feel that's a little bit of bluster. Like there's been some good deep dive stories that it's hard for him to really change everything. Obviously, he can have some sway, but not a lot. He did, during his tenure, try to get a few people into the Fed, and the Congress didn't confirm them. So there's certain things he'd like to do but can't. And I think, his talking about, because he berated the Fed chair during his time, right? And that didn't really move the market. It was fundamental. But I do think that's kind of partly why maybe it's kind of weird, but like maybe stronger dollar, because if it's like people have, uncertainty and fear, they go to the dollar as like a haven. But I think for now, people think the Fed has so much on its plate with the macro side that Chairman Powell knows how to deal with that bluster and kind of just listen and say, his party line of, we don't go by politics, right?
Hey, Liz, you wrote an article a few days ago about foreign holdings of Treasuries saw their biggest monthly gain in 2024 in the month of August. Do we care about that stuff? Do I care who owns my debt? And by the way, I learned a lot. Japan's number 1, China's number 2, and the UK's number 3. So thank you for teaching me that.
Yeah, we care. It's funny, I was dating myself of rewatching shows of The West Wing, and they were talking back then about foreign holdings. I was like, yeah, that's a real thing. And but yeah, I think what has been the norm in the recent couple years is that foreigners hold a lot of our debt, but the domestic demand has been voracious. Yep. We've had kind of a domestication, more buyers stepping up. But I do think, like you said, in those we call it Treasury tick data, and there's a little bit lag, shows that foreign holdings did pick up. So there's definitely there, and if it looks like U.S. yields will continue to go down, you're looking for capital appreciation. Not that these central banks buy like that on a flip, but they do have assets. So yeah, we're watching that. The trend is kind of picking up. Again, I still feel like the domestic buyer in the U.S. has been the backbone, for the Treasury Department in the last couple of years. But like they always say, they take all buyers. So seeing foreign demand go up is probably a welcome thing at Treasury.
That's what people tell me when I say, are we ever going to worry about the federal deficits and the debt? And they're like, people are still buying our debt. People are still buying our debt. I was like, all right. But at some point, maybe it's going to come back and get us. Liz McCormick, thank you so much for joining us. Liz McCormick, Chief Correspondent, Global Macro Markets for Bloomberg News, joining us here in our studios. Looking at the futures market, we'll get that open for you in just a moment. The cash market, S&P down 9, a little bit better than where we were earlier. The S&P, I'm looking at the NASDAQ futures down about 59 points, 0.3% decline there. Again, a little bit better than where we were earlier this morning. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Paul Sweeney, David Gura with your opening bell report. Company earnings in focus this week. Some big names, including Tesla, Boeing, as well as General Motors, IBM, Coca-Cola. Investors also have some more economic data to work through this week. We have the Beige Book, existing home sales, new home sales, factory orders for durable goods. All right, with all that in mind, let's get to the numbers as we kick things off in a new trading week. We'll start with the S&P 500, down about 0.1%, 7 points at 5,856. The Dow down 0.1%, 43 points at 43,232. And the Nasdaq lower as well, down about 0.1%, 35 points at 18,454. We have the 2-year yield, 3.98%. That's down 3 basis points. The yield on the 10-year, 4.14%, and that's up 5 basis points. To commodities, we have Brent crude, $74 a barrel, up about 1.5%. WTI crude, $70 a barrel. We have spot gold up about 0.5% at $2,735 an ounce. Checking with currencies, the dollar stronger. Japanese yen, euro, British pound weaker. We have Bitcoin down about 1% at around 67,000. At the open, checking with Spirit Airlines. We've been talking about them all morning long, up 37%. Boeing right now up about 2%. That is your Bloomberg opening bell report. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well here. We've got a Fed that's cutting interest rates, got a pretty solid earnings backdrop. It sounds like a pretty constructive environment for risk on assets. Let's check on somebody who actually gets paid to do this kind of stuff. Nimrit Kong, CIO at Northstar Asset Management. Nimrit, where do I go? Stocks, bonds, alternatives? How are you suggesting asset allocation these days?
A bit of everything. In an environment like this, we remain focused on our long-term pillars, which is let's go with diversified portfolios, have a long-term thinking, and stick with high quality.
When you say go with everything, are there any things that really stand out to you, or ones that you really would counsel your clients that they need to keep an eye on?
We really focus on constructing balanced portfolios. Equities here, as you see, with the Fed starting to cut rates, a lot of money that's been sitting parked in money market funds is now trying to find a home. Either it's trying to find a home in bonds, alternatives, or equities. Equities always, remains a good option for long-term investors. That's the engine of growth. So that's always the big anchor in our portfolios as well. And on the bond side, it's where you can find that good trade-off between yield and duration. And still right now, it's still in the belly of the curve. That's where we're looking at it.
So on the credit side, do we sit there with a 2-year 4%, a 10-year at 4.1%, or do I take some credit risk here? And if so, kind of where?
Yes. When we look at the deficits, either candidate is no matter which party, we're looking at the deficits are here to stay. And that's, something that we're looking at long term. So that means there's going to be an upward pressure on the yields. From that perspective, you look at the credit spreads still feel very tight to us. So we would still not take that much risk on the credit side. The economy is pretty healthy, all those different sides, but we would still kind of try to lock and pick your spots. We think the normalized interest rate 10-year is in the 4.5% type of range. So when the yields back up towards that, that's when we get more proactive.
What are when your clients talk to you and share their apprehensions, their uncertainty, what are they most worried about, and how do you allay those concerns as they kind of stare headlong at November the 5th and beyond? What's your message to them just about how they should process that?
Right. I mean, there's the financial markets and then there's everything else. There's a lot of things that the clients, individuals are worried about in terms of how this election plays out. So let's keep that to the side. But at least the financial markets where we focus on is, yes, there's a lot of noise around it. Yes, there's a lot of rhetoric around it. But the history shows that the markets kind of have a mind of their own. They don't react that much to the election data. And that's kind of has borne out. And even if you try to outsmart and position the portfolio to play one sector over the other, it doesn't work out that way. I mean, over the last 4 years, energy has been one of the strongest outperforming sector because of the war in Ukraine, for example. And before that, under Trump, believe it or not, renewable stocks, the clean energy stocks were one of the best performing sectors. So you just don't know. That's why you have to stay very focused on what is it that you're trying to achieve, run a diversified portfolio, and just ride out this uncertainty, ride out this volatility, and not get sucked into it. That's our message.
We're just starting to get into the teeth of earnings. We've had some good earnings coming out of the financial companies, the banks, and some others. What have you seen so far in this earnings cycle, and what do you expect to see kind of going forward? What does this market need to see?
We've seen actually pretty good earnings coming out. The banks actually, first ones right out of the gate came out with very strong earnings, no major deterioration in credit losses. Their fundamentals are going well. And some of the riskier parts of the business, like investment banking, trading, all firing on all cylinders. So we're starting to see this whole risk on environment back again. And banks, if you consider banks the plumbing of the economy, they're telling you that things are broadly okay. Now, where we do see weakness is related to the consumer, especially related to the younger and lower income cohort, those groups of consumer. And there too, you want to focus on companies that are offering that value proposition for them. But broadly, what we see is coming into this third quarter, the earnings bar was lowered significantly. Second quarter, we did 13% up growth in earnings for S&P 500. And here for the third quarter, the expectations are close to 3 or 4%. So it looks to us that the bar has been lowered enough that we're going to see good cadence out of here.
You mentioned younger consumers in particular and sort of what opportunities there might be kind of pegged to them or that they might avail themselves of. Drill down on that a little bit more if you would. Sort of, we were talking a little bit earlier just about how I think the broad line takeaway from what we heard from those financial companies was the fact that the consumer is still fairly strong, pretty resilient, broadly speaking. But drilling down again on that younger segment of that strata, what are stocks, what are companies, what are sectors that you think kind of apply to them most directly?
Yeah, it's tough to kind of put at sectors or companies that apply directly, but just broadly speaking, the New York data out of the credit panels continues to show that it's the younger cohorts, the lower income that's really felt the brunt of this increase in credit cost. And if we look at it from a bigger picture, the kind of stocks that we have in the portfolio that we think are all-weather stocks are like your TJ Maxx. That's going to be that hunting background. They provide a lot of value to the consumer in this kind of environment. So, those would be some of those directly exposed plays. Costco is one of those that's always an all-weather stock, appeals to a lot of different demographics, again, because of the ability to provide that value.
Stock-specific names here, IDEX, IDXX. Talk to us about that company, that stock. Why do you own that?
Yes. So the one that I specifically want to talk about today is IDEX. Not the two X's, that's the one related to the pet medicine, but the one with just the one X, IDEX. It's a very interesting company. So what they make is highly engineered components for a lot of niche markets. So we're talking things like pumps, compressors, flow metering equipment, and they go in all kinds of markets, industrials, agriculture, pharma, sewer systems, so they're needed everywhere. And when we look at a company like IDEX, there's no secret that the US infrastructure has really lagged behind other developed markets. We need a lot of investment in our roads, tunnels, bridges, highways, our sewer systems. So you have a company like IDEX, which has a long-term history of good capital deployment, strong market positions, but they haven't really participated in this rally because we've been in this kind of a manufacturing recession. But if we zoom out and say, give it a couple of years, as election uncertainty fades, there's investment back in the US where there's a broad political consensus around, you could kind of see that momentum building for a company like IDEX and a great place for long-term share owners.
I love the optimism there. And maybe I could ask you a bit about volatility and how you've been playing that in recent days as well. So we kind of had the VIX, for instance, hovering around 15 for so many months. Now it's jumped up to around 20. What does that tell you, and how do you play just sort of the increasingly volatile market?
Surprisingly, we would think that the volatility has been on the lower end versus what we would have expected. I mean, coming into an election year, you usually see a higher volatility. We've had a couple of down moves, but nothing major. The way we've thought about it is we've positioned ready to take advantage of those opportunities. We haven't had some major opportunities come our way, meaning major dislocation in the market at this point. But again, our stance is we've done the work. We stay ready to take positions in those long-term names, if the valuation comes in, if there's a dislocation in the markets. But surprisingly, we haven't seen the kind of dislocation we would have expected by this time.
All right, Nimrit, thank you so much for joining us. Nimrit Kong, CIO at Northstar Asset Management. Another name they like is PayPal. PYPL is a name from the past, kind of electronic payments before.
Still around.
Yeah. Stock's up 30% year to date. It's got a market cap of $82 billion. So still there in that fintech space, if you will, kind of early stage. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. Both Donald Trump and Kamala Harris are trying to reach a slim number of persuadable voters in the final few days of the presidential campaign. Vice President has events in the so-called blue wall states of Pennsylvania, Michigan, and Wisconsin today. Bloomberg government's Jack Fitzpatrick reports she'll be joined by Republican Liz Cheney.
They seem to be trying to win over people who might have been Republicans who probably at this point have decided that they're not going to vote for Trump, but maybe on the fence about whether they show up to vote for Harris or sit it out.
Bloomberg government's Jack Fitzpatrick reports Donald Trump will be in Greenville, North Carolina today, but he will also have a series of high-profile media events planned, including a rally at New York's Madison Square Garden. A helicopter crashed into a radio tower in Houston, Texas. The pilot and 3 passengers, including a child, were all killed when the chopper brought down the tower in a Houston neighborhood last night. Houston Mayor John Whitmire.
The residents are secure and safe, but we have a terrible accident scene. Multiple fatalities.
Authorities and witnesses say the fiery aftermath and debris spread across 2 to 3 blocks. Secretary of Defense Lloyd Austin is in Kyiv today. Austin is there to underscore U.S. commitment to providing Ukraine with the security assistance it needs to defend itself from Russian aggression. Austin announced an additional $400 million for Ukraine. 4 days after narrowly avoiding being executed, a Texas murder convict is to appear today before a State House committee that's looking into his case. A growing number of state lawmakers of both parties believe that Robert Roberson did not shake his 2-year-old daughter to death in 2002. So the Texas House Committee on Criminal Jurisprudence issued a subpoena last week for Roberson to provide all relevant testimony to the committee. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. David, anything that you think is going to impact this election, these campaigns in the next 11 days, or does it just feel so intractable on both sides and there's not much there?
Feels pretty intractable. I don't think it's going to be impacted by Donald Trump serving fries and burgers at McDonald's, although that was a big photo op yesterday. Yep. But, I'm talking to our folks down in Washington. I think a big moment is the introduction of the Obamas on the campaign trail for Vice President Harris. They both gave big speeches at the Democratic convention, but hadn't really campaigned with her before. And we've seen that in recent days. And I think that that's a sign that you're going to get the bigger lights of the Democratic Party out to kind of make the closing message for Kamala Harris. And I'll note there was some reporting from NBC News and a few other places that we're not seeing much of President Biden, and no plans for Vice President Harris to be campaigning with him as she makes the closing argument ahead of that election. So I think you're right. We're kind of in this stage where both sides are pretty calcified. There is this group in the middle, but what we've heard from Henrietta Treyz and others with whom we've spoken is the real effort here is getting folks who might sit on the couch, off the couch, to the polling place to vote. I think that's where they want to focus their attention now, just making sure that turnout is as high as they can get it to be.
Yeah, exactly. I feel pretty fortunate that here in the tri-state area, we are not a swing state.
We're not,
I think so. We're not
fewer ads. I think less inundation with that. Yeah,
a lot of folks are seeing around the country, like in Pennsylvania, North Carolina, and so on. So that's something to be thankful for. All right, looking at this market here, not much happening here. The S&P's off 7 points, Nasdaq's off 11, the Dow's off 89. We're gonna have more coming up. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks losing steam at the start of a busy earnings week with traders gearing up for reports from companies including Boeing, Tesla, and UPS. 3/4 of respondents in the latest Bloomberg Markets Live Pulse survey, well, they expect this reporting season to give the markets a boost. Right now, NASDAQ futures, little change, down 5 points. We have Dow futures down about 0.1%, 41 points. S&P 500, not futures. It's after 9:30, Lisa. A little change, down about 3 points. We head over to the 2-year yield, 3.98%, up 3 basis points. The yield on the 10-year, 4.13%, and that's up 4 basis points. To commodities, we have Brent crude, $74 a barrel, WTI crude, $70 a barrel, and we have spot gold higher at $2,740 an ounce. Companies making news, it's Walt Disney named James Gorman, chairman of the board, said it will appoint a new chief executive officer in early 2026. And Microsoft expanding its AI push, launching a set of AI tools that raises its competition with rivals like Salesforce. And finally, shares of Tylenol Listerine maker Kenvue, they're up about 6%. Sources tell the Wall Street Journal activist investor Starboard Value has a sizable stake in the company. That's a Bloomberg Business Flash. Paul and David.
Hi, Lisa Mateo. Thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. Another Rutgers graduate.
Oh my gosh.
The studio.
This feels stacked.
We're stacked. Eric Balchunas, ETF analyst at Bloomberg Intelligence. The Acela train by
on
default
time.
means it was
Came
on
in
time,
on time.
which
Good.
means it was on time because he made it here today from Philly. Gold, all-time high again today. Do you see that in the ETF business?
Yeah, starting to. It's interesting. Gold had made a nice run all year quietly, but it saw outflows. Some weeks it had inflows, but it was basically wrestling with net zero all year in cumulative flows. But it's finally starting to get into the positive. It's a little over $1 billion now in flows, so it's finally getting rewarded for its big kick. We have a note out last week about how the shiny metal has become a shiny object. And if you become a shiny object in the ETF space, you will get some looks, trust me. People are like, oh, what's that up there? You know? So, and if you look, it's beating the S&P. You know, it and Bitcoin are in somewhat of a, fight for dominance between those two store of values. And I will say Bitcoin and the ETFs that launched may have stolen some of the thunder that would have otherwise gone to gold this year, because they basically have taken in $21 billion. If that didn't happen, let's say Gensler denied them and there was only gold, I would guess gold would have $10 billion. I think a lot of this is the Bitcoin competition now for that store of value allocation, which is real. So anyway, gold's still doing its thing. And obviously, this is a year where everything's up. And I just want to say that for people who buy gold, remember it's zero correlated, which means that it may or may not go up if stocks go down. And so this year, stocks are up big, gold's up big. That wasn't supposed to happen. So when people think it's a hedge, it's not, because a hedge wouldn't go up in a year like this. So sometimes with gold, you get like extra bonus. It's up when stocks are, but it can also go down with stocks.
Let's stick with Bitcoin if we could, because that hit a huge number. It was like 70,000 today, and I guess it's true believers say that it is like gold is store of value. I think when we last spoke about this, it wasn't too long after the debut of those Bitcoin spot ETFs. How is all of that shaken out? And I know that there was this kind of degree of competition between each of these, which ETF is going to be most cost effective for those who are investing in them. Are we starting to see that kind of pool of 12, 13 ETFs winnowing now that we're a few months out?
Yeah, I really think there's like 11. There's 2 new ones that do covered call and this one that came late, but largely there's about a dozen. The ones that came out on January 11th, there was 9 of those, plus GBTC. And those 10 collectively, let's just remove GBTC, those 9 newborns that were born on January 11th, they have $66 billion now in total assets. So that's a lot. That's about 55% of the way to what gold ETFs have. They've taken in $22 billion in flows, as I said earlier. Gold, it took gold 4.5 years to reach $22 billion in cumulative flows. So to do that in 10 months is pretty good. So I think with Bitcoin ETFs, what it did was, just like gold, something that's very full of friction and cost. When you ETFize that,
That's the verb.
Yeah, you are gonna see some takers, because it's just you click a button and boom, you got your Bitcoin on. And by the way, it's regulated. It's with BlackRock or Fidelity or one of the other firms. It's stored with a custodian. So there's that sort of trust factor. It's ETFs are, as I say, SBF proof. So you've got the safety plus the low cost plus the liquidity. It's no doubt they're a hit. And they've survived some downturns better than I thought. It went down like 25% a couple months back, only like 3% of the assets left. So when you have these downturns and you have most people hang in there, it's really helpful, because then when the upturns happen, you can start regaining new highs in your net flows, which they're doing. So even the worst one of the group, the Wisdom Tree, which I call like the last horse in that Kentucky Derby from January 11th, has 257 million. So if you launched an ETF, let's say it was the Paul ETF, and you launched it in January, if you had 257 million in by now, you would be bowled over. You'd be like, wow, we have a hit on our hands. And that's the least of the bunch.
Wow.
Right. So there's a lot of cool thematic ETFs we talked to you about, but you came out with a report recently. ETFs and mutual funds that track the S&P 500 index are on pace to smash the annual record for flows. Who's coming into QQQ, whatever those things are you guys play around with?
I saw that in the outfield.
Are those,
I think, yeah.
Exactly. Are those institutional investors? Are those RIAs that have said, oh, I can track, there's this ETF thing out there? Who's coming into the S&P 500 these days?
By the way, my mom and this little girl she babysits, they watch ETF IQ, which is on at noon today, by the way. And I always say the Qs. And so they have almost, it's not a drinking game, but they have this game. When is he going to say the Qs? And they still don't know what it means, but they're like, when's he going to say the Qs? And I inevitably say it once a show.
Yeah.
Anyway, so look, the Qs are massive, right? It's the S&P also. The Qs are special because it's that Mag 7 concentration, but S&P is a little more of the sort of broader version of beta. So if we look at just S&P 500, if you're up 24%, you know, S&P 500 ETFs like IVV, VU, or SPY, this is 24% the easy way. You had to do no thinking.
Yep.
There's no cost. There's no turnover. You get every ounce of that 24%. So you've got that. It's a really good deal. Plus, the returns are like basically triple what you normally get in an average year. So why overthink it? So, you know, maybe there's a little bit of a self-fulfilling prophecy. The more this is easy, the more people will pile in. That helps some of those stocks get up higher. We'll see what happens in an unwind, but typically these S&P people still put money in on when it goes down, just not as much. But right now we're at about 215 billion between all the S&P 500 trackers, index funds, and ETFs, which would be an annual record, and we're still in October. So again,
215 billion of new flows?
New flows.
Wow.
Yeah. So listen, I mean, at the end of the day, we talk about Bitcoin, we talk about the hot sauce and the boomer candy and all this stuff, but the bulk blob of money still buys cheap beta. It's just boring. What else can you say?
Yeah.
So we don't talk about as much, but yeah, it's where almost all the money's going.
My last question is just, we try to keep a global focus here. We were talking with Damien Sassower about his love for Uruguayan bonds earlier in the show. But let me ask you about China. And we've seen the Chinese central bank make some more moves this morning. How has that sort of dampened or added to the appeal of Chinese-focused ETFs?
Yeah, so there's been a little cool off. So in October, when October started through the end of last week, so let's eliminate the last couple days, the flows were 11 billion. The biggest month ever on record for China ETFs was 4 billion. So we're talking almost triple the monthly record. Now that 11's been stuck for like a couple days though. So I think there's people who rushed in and want to play this, they're kind of set. Now I think it needs another leg up to get like the next round of tourists. We'll see what happens, but FXI is 5 billion of that 11. And that's interesting because FXI is used by traders and quote unquote the smart money because it's liquid. It's one of the more flawed China ETFs, but was the first one that has the most volume, so they love it. But then Asher is the one for A shares only, local shares. The one thing you need to watch out for is, are locals buying? Because the Chinese government could do QE, but if it doesn't make the locals want to buy China, what's the point? And they finally did. So this past week, locals are buying the Chinese stock market. That's why I think the 11 billion is at least stuck there. So it's something to watch. Yep. But man, who doesn't love QE?
Who doesn't? Eric Balchunas, thank you so much.
On that note,
appreciate it.
another Q on the way out.
Eric Balchunas, ETF analyst for Bloomberg Intelligence, in our studio. Thank you, Amtrak Acela Train. This is Bloomberg.